Morning friends. So we are doing the chapter Dividend Policies, in which last class we completed Modigliani-Miller approach and few leftover sums in Gordon and Walter also was completed. Today we will be doing the area rights issue. Two problems in rights issue will be completing. We will be doing an area called as residual dividend policy. There also will be doing two more problems. Linter's model will try to complete, and one of the examination problem regarding NPV and share valuation involving dividend policy also will be completed. Next class we will do two problems in buyback and one small case study type of problem. With that we will complete the chapter dividend policy and start with the next area, portfolio management. So now let us first summarize what has been done in this chapter till now before we proceed further. Those who come late, please without noise settle down. Those who already come have started the class. Good morning friends. Good morning, sir. So please don't talk. Can I start or not? No. So we saw that business is all about raising finance, investing in projects or assets which generates return. The return will be used to service the finance providers. In this, there are two types of finance providers, debt and then equity. When the profit is earned, how much should be given to debt is not a decision, it is predetermined issue given in the indenture itself. But for equity, we may give their money as dividend or we may retain it. Hence, you have to decide whether the profit should be distributed to shareholders or not. Such a decision, we call it as dividend decision. There are three decisions: investment, financing and dividend decision. Financing decision affects the company's wealth through the cost of capital. Investment decision affects through the IRR or return on investment. Will the dividend decision affect the wealth of the company as well as the shareholders is the issue. Yes is what people of relevance said. No is what the irrelevance theory said. Relevance, there are two theories, Walter and then Gordon. Irrelevance, that is one theory called as Modigliani-Miller approach. What Walter says is that if you have good projects, then keep the money, don't give it to the shareholder. If you don't have good projects, don't keep the money, distribute the entire money to the shareholders. So where R is greater than KE, R is the expected return on investment, KE is what the shareholder expects. If R is greater than KE, then you are able to earn more than what they require, then keep their money. If R is less than KE, you are able to earn less than what they require, then give their money back. R is equal to KE, any payout is okay. So Walter valued the share using the formula P0 is equal to D plus R by KE into E minus D whole divided by KE. Gives you the Walter share valuation formula. Next, we discuss about Gordon. Gordon also accepted Walter by saying that yes, dividend affects the valuation, but does not take the extreme view that either 100% payout or 0% payout will be the good policy. He says it all depends on the factors. Okay, the optimum payout measures the share price, he says, and he gives his argument in two angles. Company earns profit, he can have a retention or give it as dividend. The advantage of retention is retention propels growth. Growth can come not with the same as a size of business. The business has to grow means new investment should be made. New investment can be made only when you retain the money and plow it back into the business and not give the entire money to the shareholders. In that case, retention propels growth. At the same time, retention increases risk of the shareholders because they feel that a current income is more certain compared to a promised future growth. He calls us a bird in a hand better than two in the bush. In the case, the advantage of retention is growth, disadvantage is increased risk. It is vice versa for the dividend, where the advantage is the current income, the disadvantage is the stagnation in the growth. He says the optimum payout is that dividend policy where we'll be having the maximum P0. He calculated P0 using the formula P0 equals DE into 1 minus B divided by KE minus BR, where B is the retention ratio, 1 minus B is the payout ratio, E is the earnings per share, E into 1 minus B is the dividend, KE is the discount rate, BR is nothing but G. Growth depends on retention B and the return on retention R. G is equal to BR. He said as the dividend increases, the KE decreases, but the growth also decreases. As the dividend in the numerator decreases, the growth will increase. At the same time, the KE also is going to increase. Gordon said whichever is the payout ratio that gives the maximum P0, that should be the optimum payout. Then we discuss about Modigliani-Miller approach. Modigliani-Miller says that the wealth of a company doesn't depend on how you finance your projects, does not depend on what to do with the money earned by the projects. It purely depends on the return your projects are expected to give. He says investments, if the good investments are available, then the company's wealth will increase. If there is lack of good investment, the company wealth will decrease. It doesn't matter how you finance your investment. It doesn't matter what you do with the money earned from the investment. He says financing decision as well as what? Dividend policy is irrelevant for the wealth creation. Financing decision irrelevance he discussed in the capital structure decisions in IPCC through primary and secondary arbitrage. Dividend decisions now we are discussing in the final level. What he says is company has got two options. If it is having some surplus profits in hand, what you can do, distribute as dividend or retain and make the new investment. If you retain and make the new investment, simply the cash becomes an investment. But if you distribute dividend, he said, don't think the investment will stop, will raise further finance. Okay, so dividend goes out, the new finance comes in, the wealth of the company doesn't change. Shareholder, what happens is, the same wealth is now going to be shared by more number of shares. So the disadvantage of dividend is the share price is going to obviously drop. At the same time, the company is going to give dividend, they are going to receive the dividend. In that sum, we saw that $10 share became $9. But at the same time, is getting what? $1 as dividend. So anyhow, his wealth also is going to remain unchanged. Without dividend, the entire wealth is on the shares. With dividend, the wealth is split into share as well as the cash. That's the only difference. And he just proves his irrelevance of dividend through his formula for share valuation. NP0 is equal to P1 into N plus M minus I plus E all divided by 1 plus KE. And we also discussed some extra issues in the Modigliani-Miller approach problem itself, where we saw how the NPV increases the shareholders' wealth and how the balance sheet should be read as a value-based balance sheet and not a book value balance sheet. All those issues I discussed, I cannot repeat it once again because it's not a formula, it is a deep discussion which has been made. I dictated the notes also for this in the previous class. I think with this we completed our discussion in the previous class, right or not? Now, my question is, those who went home and saw the notes, mainly the Modigliani-Miller, I dictated a lot of points. That is the value-based balance sheet, how the NPV affects wealth, everything I dictated or not. Those who went home and revised what has been done in the classroom, please raise your hand. First class, how many people raised here? Direct quote, indirect quote, you all went and revised here. Chappa matter, okay, nothing there. Yes or no? No. All this. Okay. I don't want to proceed further with advice. I know that it won't work, but okay, see. Every day, go and revise. I can say it like this. one of the easiest subject to learn is financial management. Okay, it is also one of the difficult subject. If you understand the nature, it is not the using calculator, tuck doing and then what writing it. So it is not a calculator based subject here. It is more concept based. It is more visualization oriented. Again, I say, when I say something, you should be able to imagine what is happening and how the prices are affected. That is why I am taking more pains to explain you. It will not take long time for me. Dividend policy, I can even complete in 3 hours or 4 hours. I can tell a Walter formula, simply explain supervision the Walter concept, complete one problem. Mardigal and Miller, I can write the formula and then do it. Yeah, there's no need for me to explain what is value-based balance sheet, how the share price gets what affected, how the irrelevance are proved. Everybody follow not? 2 problems Mardigal and we did or not. Those 2 problems will be asked in examination, not more than that. The 2 only 1 problem. Second problem is a replica, only with what? Number change. But that is not a way to learn the subject. Because question paper, now the standard is increasing. More focus given by the institute in making this subject much more attractive and what? Say the paper standard is increasing. That is why all these discussions are made. Now, at least from today you follow here. See, I'll say bond valuation chapter itself is easy. Reason is, it is very structured. The chapter is what? Very structured. YTM calculation, we had some formula, we calculated it, right or not? And we had immunization, a pakka strategy, forward rates, how to calculate. That is problem solution. There are also a lot of concepts were discussed. It is more structured. But understand again, share valuation is more creative. The subject, the chapter is what? More creative. No sum one can classify as black and white. Classify as what? Black and white. This is how we should value share. Nobody can say. Because Mardiglani Miller problem, I valued it differently. Same problem, I can value differently in what? The Walters approach. Everybody follow not? Now, share valuation is all about more hearing, more learning and then visualizing. The notes which I dictate is very important. This is going to continue for another 1 month through portfolios as well as the equity valuation. Please go home and revise. Every point I dictate, make this as a learning objectives. Notebook, I do a sum or not and dictate number of points or not, whether it is Walter or Gordon, everything elaborately dictated only for your benefit. Okay. In that case, word by word you should have understood. You need not read any textbook, nothing. If you understand word by word, what is done in notebook, that is 100% more than sufficient for understanding the subject. Are you following? And if you don't understand, you put hard effort to understand. So it increases NPV, he said something, so 200 increase dollar, it somehow increases by what? 0.2, don't understand, leaving and going, not like that. Yeah. Why? It has said as what? 200. What has been dictated? How the cost, what is cost of capital? What is IRR of the new project? Everything word by word one should understand so that you'll be having the clarity. Now, because I'm afraid, then if this trend continues, last class you went, you came back this class. Then next class you go, come back what? Next class. Whatever the portion gets what? Mounting, the clarity begins to reduce. Did you understand or not? Now, one should come to this class fully geared up. Already over, what is new? Morning 4 o'clock happened, we have to go to SFM class today, waking, brushing the teeth and then coming. Okay, evening AMA class, let us go. Next day FR class, let us go. Not like that, yeah. When you come to the class today, you should be prepared when you reach the class. I don't say prepared for the next issue. Fully prepared about what? What has been already discussed. If you are fully thorough with what has been already discussed, and expectation will come, what is going to be next discussed. For you, some explanation will be there. Next rights issue, what is going to be told, explanation will be there. But when I tell that, when I continue from what is left in previous, on that day I told it increases shareholders' wealth. What did increase shareholders' wealth? Ange bulb off. That's what I am saying. Because you won't be able to correlate because you are not ready. Yeah, you should be ready or not. Cooking is happening in the house here. One should be hungry to be ready, or not. Cooking is happening, you keep on sleeping, yeah. Then you have to wake up, take bath, do all the rituals, and then go for what? Eating. Now, by the time hunger will go, right or not? Now, you should be ready to eat, right or not? Eating, one should be ready. One should be what? Ready to eat. You be expecting, okay, that something is happening in the kitchen, okay, good dish is being prepared. If you have that expectation, you will eat more. Some people don't even give the recognition to what the food also. Something comes, they eat means, then the eating will not be so much delicious. It is not. Same way, you should be prepared when you come to the class. Yeah, please. Today, horrible. So few hands only raised. I hope they all have raised honestly. It is not. No. But still, can you, from today, it won't take, again I say, 1 minute will take, it won't take lot of time here. It takes only some sincerity, that's all. It is there in the notebook. If you count last class discussion, it won't be more than 5 or 6 pages. I am only shouting for 3 hours. Yeah. What you are listening or writing is only few. 5 or 6 pages maximum, it won't be there. And 2 days, 6 pages, not an issue to cover. Right? And if a person has covered IFM fully, I don't say extra books. Workbook. All sums which I have done in the classroom, IFM fully revised, bond evaluation fully revised, equity, that is dividend policy till yesterday class fully revised. If you are like that, that confidence itself will make you learn new things much more better. Otherwise what happens is, sir is keep on discussing something new and new and new. Old dollar is a dollar, yen, pound, etc. Quotes, money market rates, euro rates. That will become what? Somewhat mystery. Right or not? Now, sometimes what happens is you refer to the past, you become afraid. Future, it is mounting, you get no clarity. Then you will be losing heart in the subject. I am saying really. This is the way in which generally students find subject difficult. No subject in the world is difficult for any one of us. Only thing is what? Give time and attention to that so that it will become interesting and readable. Now, today I give you a target. Dividend policy, what I complete till the end of today's class, one should compulsorily revise. Backlog at least for this chapter, clear it. One should compulsorily revise. Don't scan through it. Word by word, understand. You visualize always. When you read things, and then you have to keep on thinking what I have to visualize what is said and try to explain to somebody what is discussed. Okay, if you have 2 or 3 persons studying together, most of you from outstation will be sitting in what? Mansions, hostels, etc. In that case, don't discuss any other Facebook and other things here. Tell to explain to somebody, make a discussion. Okay, make a discussion. Always you can doubt my notes also. That is, why is it? Why can't it be like this? Now, always when you discuss more and more clarity will be got. If there is no other person to discuss, you question yourself, what if? Always have to do sensitivity analysis. What if this is happening? They will be getting more and more clarity. Now, I am saying only a way of reading the subject. Now, culture generally bad. Generally in schools and all, they always make you learn everything in by-hearted way, and it is only structure. Okay, this problem, this answer. We either use calculator or we mug up. Right or not? So theory mug up, problem use what? Calculator. That should be fitting within what? Formats. Even accounts we learn that way only in school. Yes or no? But debit, P&L, debit side, all these items will come. Okay, salary, wage, etc. Suppose they give a new generator rent, they don't know where it goes. Okay, only building rent is there, where generator rent should go. Nobody knows. Yeah, okay. I am just saying extreme. All respect to those who taught us earlier, but at that stage, like that only one can what? Understand. Okay, there is not an issue, but one should grow along with the age, right or not? One should grow, mentally grow along with the age. Please make efforts to read and understand. Now, those who are, don't clap and all, tell me through action. Those who are willing to go today and revise full dividend policy, raise your hand. Good intention, okay, again I say, but implementation should be there, yeah, right or not? Now, and Manasvallabha, continuation, okay, because when few raise the hand, I got very much upset, okay. I don't know how you will understand the future concepts if it gets built up, at least from dividend policy till the batch ends. Forget about bond, forget about what? IFM, don't forget about the, think about the backlog. Okay, just start in the current chapter onwards. Please revise dividend policy up to date. I am telling seriously. Those understood last class 90%. After you understood what? 100%. Those only 10% will be understanding what? 40%. Improvement will be there in what? Understanding once you revise. Okay. Now, let's go to the next concept called as rights issue. Okay. Now, we had a brief introduction about rights issue, a simple and small concept only. Let us summarize that and then do two problems in rights issue. Please. Okay. Companies may require money for its future projects. Always, funding cannot be through retained earnings. We should raise money externally also once you want to grow more and more the business. Please. For that, suppose a company decides to raise more equity. Decides to raise what? More equity. Is now having a 300 crores equity base. It wants to issue another 100 crores rupees of equity shares for their new project. If they want to raise fresh capital or more capital, first they should offer the capital to whom? Existing shareholders. They should say, I want 100 more crores. Are you willing to take up that extra capital? That's the first issue. If the existing shareholder says, no, we are not willing to take up that extra capital, they pass a resolution, 81-1A special resolution they pass, what is it? Denouncing their rights, saying that you can issue to outside public also. They can give the freedom to issue to what? IPOs or to a private equity, anybody, but they can say you need not offer the share to the existing body of shareholders. You are free to offer to what? Outsiders. Outsiders may be general public or to a specific private equity firm, anybody. If they pass a resolution, then they have denounced or they have what? Given up their right to subscribe for the new capital. Yes or no? If like that a resolution is not passed, then the company has to raise the money only from what? Existing shareholders. So what the company does, it gives a rights offer. It gives what? Rights offer. For each shareholder, 3 shares if you are holding, I'll give you 1 right. Okay, that means 3:1. Like that the ratio will be determined. They'll make a rights offer. And you are having a right now. Okay, you have got 2 options. As a shareholder, what are the 2 options for you? Either exercise the right and buy the company shares and hold more capital in my company, right or not? Or the other option is what? Give the right to other person. If you don't have the money to exercise, if you don't want to become a more shareholder, give the right to what? Another person. He can become your company shareholder. Respond yes or no. So when you give your right to buy the share to some other person, you are giving a right or not? For that right, you should charge some price. Right or not? There should be a value for that right given. How to value that right is one of the predominant discussion in this area called as rights issue. Everybody following? Now, we can have a notes for this after I complete the question number 1. Okay, can we start or not? Now, take question number 12. Take question number 12 in the workbook. It's one of the past examination questions in study material also. Take question number 12. Jaspal Limited has issued 30 lakhs ordinary shares of ₹1 each that are at present selling at 4 per share. The company plans to issue rights to purchase 1 new equity share at a price of 3.2 per share for every 3 shares held. A shareholder who owns 900 shares thinks that he will suffer a loss in his personal wealth because new shares are being offered at a price lower than market value. On the assumption that the actual market value of the shares could be equal to X rights price, what would be the effect on the shareholder's wealth if he sells all the rights? B. He exercises half of the rights and sells other half, HALF, and sells other half. He does nothing at all. That's a question that is being asked. Please go through the question, understand the transaction. Then you can just go for the concept. Put sincere effort, read the question before you start with the solution. Shall I proceed, Abba? Now, very simple sum. See, old shares 3 means one new share is going to come, right? Yes or no? There are 3 old share means one new share is going to come. That's a rights ratio. And the old shares are now trading in the market at how much rupees? 4 rupees. Every share is what? How much rupees? 4 rupees. That 1 rupee is irrelevant. I don't worry about what is the book value. Always the word value here means what? So a share is trading at 4 rupees. There are 3 old shares. For every 3 old share, how many new share is going to come in? 1 new share. The new share is going to be issued at same 4 rupees or less than 4 less than 4. He is going to issue how much price here? 3.2. This is the detail given. You are one of the shareholders of the company holding how many shares? 900 shares. You are very unhappy about this rights issue, saying that 4 rupees company share is now offered outside how much rupees? 3.2. It is going to erode my wealth, is what he is worried about. Above that only we are going to discuss. Will the rights issue affect the wealth of the current shareholders? Will dividend affect the wealth we are discussing or not? Like that. When new shareholders comes into the company, does it affect the wealth of the shareholders? Does rights issue affect the shareholders? Well, is a main discussion in this particular problem. Respond yes or no. Same discussion in the next sum also. Can I proceed? Now, in this process, we are going to learn 2 calculations. Calculation of X rights price. Calculation of what? X rights price. Number 2, calculation of value of right. Tell me what are 2 issues to be calculated? X rights price, value of right. X rights price means what will be the price of this company share after rights issue is completed. Before rights issue, the company share is trading at how much rupees? 4 rupees. And after the rights is over, once everything has settled, what will be the price after the rights issue is completed is what we call as the X rights price. I use the word theoretical X rights price because actual share price need not be as per what we calculate, right or not? Because share price is also triggered by market factors. I am saying theoretically what should be the price after rights issue is over. This is number 1. Number 2, you are having one right or not? Suppose you give that right to me. Okay, sir, I don't want to buy that share. You buy the share on my behalf. I'll give you the right to what? Buy my company share. You give one right. In that case, you will charge me some money or not? What is the value you are going to charge for the right is the next issue. These are the only 2 numbers we will calculate in the sum, namely X rights price and value of the right. Both are very, very simple and easy calculations. Everybody is or no? Now, rather than discussing it as a formula given in the study material, I'll discuss logically and then put the formula, very simple formula for you to easily understand it. Can I start or not? Now, see, I'll complete the discussion first and then put the slide. Tell me question number 12. Okay. I'm going to calculate number 1, X rights price. People call it as X. They call it as what? X. Now X rights price, no, so simply called as what? X. Okay. Now, same. What is the wealth of the company before rights? Okay, suppose the company is having only 3 shares. 30 lakh share is there. What I say for 3 shares will be true for what? 30 lakh shares. Okay. Before the right, for example, how many old shares are there? There are 3 old shares at how much rupees? 4 rupees. 12 rupees is the company wealth. Yes or no? Now, we have 30 lakh shares. With 30 lakhs into what? 4. It becomes what? 120 lakhs and so on. I say, suppose the company is having only 3 shares. It's a 3 share company. How many shares company? 3 shares company. Before the rights issue is made, the wealth of the company is number of shares into price of the share. 3 shares into 4 rupees. Very simple. What is Infosys wealth? Market capitalization. What is that here? Number of shares of the company into market price of the share. What is MTG gas wealth? Number of shares into market price per share. So that's how we will measure the wealth of a company. So the present wealth is 3 share company into how much rupees per share? 4 rupees. The current wealth is 12 rupees. Respond yes or no? No. Will the wealth increase or not? Yes. You know, somebody is going to give you new money or not. Now add what? New issue. Okay. How many shares I am going to issue? Every 3 shares, 1 right. He comes in free with some money. He is not coming free into the company, he is bringing what? Money. How much is bringing? 3.2. What is the additional wealth? That means after the rights issue, the company wealth is how much here? 15.2. Earlier I had 12 as a wealth, and then I had what? 3.2 extra money coming in. So old wealth plus new money coming in gives you what? The new wealth. How much new wealth here? 15.2. Is this 15.2 going to be shared by the same 3 shareholders? More than 3? More than 3. So now what will be the number of shares sharing the 15.2? 4. That means I can say X is equal to 15.2 divided by 4. Is it how much it is here? 3.8 per share. So this is going to be the share price after the rights issue is made. Everybody follow or not? So very simple. Already I am having 12 rupees wealth. And I'm going, that is the assets are worth how much rupees? 12 rupees. I'm going to have a new asset by way of cash coming in. How much rupees here? 3.2. If I total my balance sheet now, what is the asset value? 15.2. Earlier I was sharing my assets by 3 shares. Now how many shares are going to take the claim asset? 4 shares. 15.2 by 4 gives you what? 3.8. This will be the share price after the rights is over. This will be the logical or exercise price of the company share. Everybody yes or no? So this is the exercise price calculation. Can I proceed or not? Now, next is number 2. I'm going to calculate what? Value of right. Okay. I am holding the company share at present. Okay. I have the right or not? If I give you the right to buy the share, 2 things will happen. You will laugh, I will cry. You will laugh, I will what? Cry. How much you laugh or for what I cry, I'll charge you price. So, what is the price I'm going to charge here? How much you enjoy that you have to give me as price. Or how much I am crying, you should give me as what? Price. Both ways the answer is what? Right. How much you laugh, so much I cry. I don't know what I am saying. In that case, let us see what is that you enjoy as a new shareholder. What I lose as what? Old shareholder. Very simple. Alternative 1 is, as a new shareholder, you are buying a share, what? How much rupees? 3.8. Because when you buy one share, you become a shareholder of a X-Rates company. As soon as you buy a share, you get a share worth how much rupees? 3.8. For that you are paying just how much rupees? 3.2. Immediately on purchasing a 0.6 increase in wealth for you. Right or not? Very simple, yeah? I am the new shareholder. I give a company check for how much rupees? 3.2. It allots me one share. Tell me that one share is worth how much? 3.2 or 3.8? 3.8. I pay 3.2 rupees to get the share worth what? 3.8. You enjoy 0.6 increase in wealth as soon as it is purchased. So no. Suppose you prepare a value balance sheet, personal balance sheet. What is the entry you pass here? Investment account debit to what? Bank account credit. How much goes out of your bank? 3.2. And unlike your accounts, investment is not what? 3.2. Investment how much is here? 3.8. That's the value of your share. Yes or no? As soon as the cash becomes investment, the 3.2 cash becomes what? 3.8 shares. So immediately on purchase, you enjoy an increase in wealth by how much paise? 60 paise. This is what you enjoy. Yes or no? That is what I say. Please give me the 60 paise as what? Value of that because it is my company share. Are you following or not? So I allow you to purchase this share only if you give me what? 60 paise. Very simple. I am the old shareholder. I am holding how many shares? 3 shares. And you are my friend. I say, I don't want to buy this share. If you want, I'll give you the right. I'll just what? Give you the right. You can subscribe my company shares. In that case, when I give you the right, I charge you how much price for that? 60 paise. You have to pay 60 paise to me and then get that particular right. And then buy the share at how much rupees here? 3.2. Then you'll be paying the fair price of 3.8 of that share. Respond yes or no. Now, the other way to understand is very simple. Now, I am holding a 4 rupee share. I am holding how much rupees share? 4 rupee share. After the rights issue is over, my share price become 3.8. Right or not? Now, today I am enjoying a 4 rupee share here. Because of you, new person coming in, my wealth dropped by what? 20 paise. Right or not? So, your 4 rupee share has become what? 3.8. For so every share, I am suffering 20 paise. Yes or no? For every right share, the 3 existing shares are not. That means into 3 gives you how much? 0.6. Because one right represents what? 3 existing shares. Every existing share 20 paise value drop. For 3 shares, how much value drop here? 60 paise. This is the loss I am suffering, for which you should give me 60 paise. Everybody, are you following or not? It is going to be called as what? The value of the right. We'll discuss the next stage once we complete the writing of the solution up to this. Everybody, are you following or not? Now, tell me first of all, what is exchange price? Price of the share after the rights issue is completed. Very simple. Old wealth plus new wealth divided by old shares plus new shares. That's all. Are you following or not? Old wealth is number of shares at present into market price of the share. New wealth is how much is coming into the company as what? Rights money. This entire wealth is not going to be shared by old shareholders as well as what? New shareholders. It becomes 3.8. Respond yes or no. Next, value of right. Now the new shareholder are coming and sharing in my wealth or not? Due to the new person coming in, I am suffering, I am happier suffering. Because my 4 rupees share has become how much rupees? 3.8. Due to the rights issue, there is a dilution in my wealth by how much paise? 20 paise. Every right share is going to put how many shares here? 3 existing shares. So I have a dilution in wealth of 60 paise. For each right I give you, I will charge you how much paise? 60 paise. From your angle also fair only, because you are paying how much rupees? 3.2. You have to purchase a share worth how much? 3.8. Obviously, nobody can buy a pay 3.2 for a share worth what? 3.8. You give me that 60 paise because the 60 paise you are gaining because I am eroding my wealth. Yes or no? If you pay the 60 paise, both of us are on equal footing at the beginning of this transaction. Respond yes or no. Fair value is paid. This is what we call as the exchange price and value of rate. Respond yes or no. Tell me, why this rate gets value? Tell me. Because in a 4 rupee share company, a new person is coming not by paying 4 but paying how much? 3.2. That's the problem. Yes or no? Did you understand my discussion or not? See, already, for example, 2 of us are partners. Okay, you are having 4 rupees, I am having 4 rupees. Wealth in my balance sheet. You are the third person coming in. Okay, when I want to make you come in, how much should you bring for all of us to be equal? 4 rupees. You should also bring what? 4 rupees. Then, or if you come free, then our 8 rupees, 3 will be sharing. That means when you bring 4 rupees, then you are on par with me. Right or not? If I have bought 4 rupees, the new rights issue made how much rupees? 4 rupees. Now, then what happens here? 16 rupees will be what? The share, the total wealth divided by how many shares? 4 shares. The wealth remains what? Unchanged at 4 rupees. So no, in that case, no need to charge any value for the right because I am enjoying 4 rupees. Well, you are also bringing what? 4 rupees. We are all equally placed at this stage of business and we can move forward. Everybody following what I am saying? But if you are coming into my company with a 4 rupees worth company by paying only what? 3 rupees, then I will be having what? Dilution. Father will be asking a price for it. In my son, no. This is what we call as the theoretical exchange price, and for exchange price only gives the value of the right. Can I proceed further or not? Now, let me put in the slide. Same thing only, but in form, formula type. That's all. Theoretical exchange price is a suggested answers. X means what? Exchange price is M into N plus R into S divided by N plus R. Okay. M means market price per share. N means what? Number of shares before right. R means number of shares eligible for right. That is right number of shares. And then S means subscription price. Okay. Divided by N plus R. Please tell me, M means what? Market price before right. Tell in our problem, what is the M? 4. N means what? Number of shares eligible for rights. How many shares? 3 shares. R means what? Right shares. How many right shares? 1 right share. S means what? Subscription price. What subscription price? 3.2. 4 into 3 plus 1 into 3.2 divided by N plus R. These are 2 new shares and not old shares, right shares. He is going to give me the X rights price. Are you following or not? No. That's how the number has been substituted. It is 4 into 3, M into N plus R into S. 1 into 3.2 divided by 3.3 plus 1 gives you 3.8. Can I proceed or not? Now, next question is what? Rights value. 2 ways. N into M minus X. What is M? Market price of the share before write. What is X? X writes price. So tell me what is the market price before write? 4. What is X writes price? 3.8. 4 minus 3.8 gives you 0.2. Into N means what? Whole number of shares. How many shares are there? 3 shares. I get 3 into 4 minus 3.8. Gives how much? 0.6. One way of finding out. If you don't like it, other way is very simple. It is X minus X. Okay. What is the X rights price? 3.8. What is subscription price? 3.2. I pay 3.2 to buy a share. What? 3.8. The rights value is 0.6. Everybody, are you comfortable or not? Now, with this, we calculated the first two parts. Please tell me yes or no. Now, copy this. We can have a brief notes and then go for the last about the 900 shares. We'll be discussing now. Okay. Now, step 1. Finish copying on. Finish copying up. Those not copy, raise your hand. Shall I proceed? Can I proceed? No. Don't write the formula once again. Substitute number x is equal to 4 into 3 plus 1 into 3.2 by 3 plus 1. Finish copying above? Next, step 2, value of rights. Step 2, value of right. Finish copying on? Those not copy, raising hand. Shall I proceed? Write down notes. Point number 1. Point number 1. Understanding X rights price. Point number 1. Understanding X rights price. Understanding X rights price. Underline that. Below that, right? Existing wealth. Existing wealth is equal to, tell me what is the existing number of shares? 3 shares. Okay. Don't say 30 lakhs, it is only multiples, that's all. What is true for 3 shares will be true for what? 30 lakhs also. Okay. Existing wealth is equal to 3 shares into how much rupees? 4 rupees. Existing wealth is equal to 3 shares into 4 rupees is equal to rupees 12. And additional wealth brought in by new shareholders. And additional wealth brought in by new shareholders. They don't come with empty hands, no. They bring what? Some money into the company, no. Additional wealth brought in by new shareholders is equal to what into what? 1 share into 3.2. Additional wealth brought in by new shareholder, 1 share into 3.2 is equal to 3.2. Total wealth. Total wealth. What is total wealth here? 15.2. Total wealth 15.2. Next line. This wealth is now being shared by. This wealth is now being shared by how many shareholders? 4. This wealth is now being shared by 4 shares. This wealth is now being shared by 4 shares. Is now being shared by 4 shares. Hence, the value per share is. Hence, the value per share is 15.2 divided by 4. The value per share is 15.2 divided by 4 equals how much? 3.8. The value per share is 15.2 divided by 4 is equal to 3.8 per share. Everybody yes or no? This is how we should understand the X rights price. I think all know what is X rights price now. What is X rights price? Price after the rights issue. X dividend price means what? Price after the dividend. X interest means what? After. The word X means what? After. Can you see? Next. Point number 2. Understanding value of the right. Understanding value of the right. Understanding value of the right. Understanding the value of the right. Okay. Right below that. Due to rights issue, the new shareholder gains. Due to rights issue, the new shareholder gains and the existing shareholder loses. The new shareholder gains and existing shareholder loses, which can be understood as follows. The new shareholder gains and existing shareholder loses, which can be understood as follows. Which can be understood as follows. Branch it into 2. Branch it into 2. First branch, new shareholder. Second branch, existing shareholder. New shareholder. Second branch, existing shareholder. New shareholder, put a down name I can write. Purchases a share worth. Purchases a share worth. Answer my question. A share worth how much rupees? 3.8. Don't say 4. 4 is a share price before the right. Yes or no? He is not going to be a shareholder of a before right company. He is going to be a shareholder of what? An after right company. Yes or no? Purchases a share worth. Purchases a share worth 3.8 by paying purchases a share worth rupees 3.8 by paying how much? 3.2. Purchases a share worth 3.8 by paying 3.2. Gaining how much, sir? 0.60. Gaining 0.60. Go to the second branch. Existing shareholders now, write down. A share worth 4, a share worth rupees 4 becomes, a share worth rupees 4 become how much rupees? 3.2, 3.8. A share worth rupees 4 becomes 3.8 after rights. A share worth rupees 4 becomes 3.8 after rights issue. Becomes 3.8 after rights issue. Thus, he loses, how much paise? 20 paise per share for, thus he loses 20 paise per share for how many shares? 3 shares. Now one right share represents 3 existing shares or not? So he loses 20 paise per share for 3 shares. 20 paise per share for 3 shares, which is equal to 60 paise. Is equal to 60 paise. Everybody following or not? Next paragraph, separately write. The existing shareholder, comma, if he renounces the right, the existing shareholder, comma, if he renounces the right in favor of, the existing shareholder, if he renounces the right in favor of another person, the existing shareholder, if he renounces the right in favor of another person, should charge, how much paise? 60 paise. Should charge 0.60 for the right given. Should charge 0.60 for the right given. Should charge 0.60 for the right given. Can I proceed or not? Next, last point. Point number 2 or 3 or 3. Why the right gets value? The right is having 60 paise value or not? Why the right gets value? Why the right gets value? Question mark. Answer. Why the right gets value? Because, answer, because a 4 rupee share, because a 4 rupee share is offered at, a 4 rupee share is offered how much rupees? 3.2. Because a 4 rupee share is offered at 3.2. A 4 rupee share is offered at 3.2. Everybody up to this? Having clarity here? Can I proceed? Now, let me complete the remaining part of the question. See, you are a person having how many shares? One example, you are as a person having 900 shares. Let us see what happens in 3 scenarios. The question gave you how many scenarios? 3 scenarios. Can you read the 3 situations for me? Situation number 1 is what? He sells all the right. He gives the entire right to his friend. At what paise? 60 paise. Second is, he exercises a swap, that is, he purchases half of the share and he sells what? The remaining as the rights. Third, he doesn't do anything at all. These are the 3 situations they ask you to answer. Can I proceed or not? Now, let me answer it and then give you time to copy it. Can we start or not? Now, see. You are holding how many shares? 900 shares. That means you get the right to subscribe 300 shares. Yeah, right or not? Now, the company gives you a letter. It gives a letter of offer saying that you are entitled to buy how many shares? 300 shares of the company. How much rupees? 3.2. You are getting that entitlement, yes or no? Either you can buy the 300 shares at 3.2 or give that right to what? Some other person who can buy it what? 3.2. Either can give the full right or part of the right. It is only your wish. Everybody following in order. Now, let's see what is going to happen. Okay. Before the rights issue, what is your wealth? Holding how many shares? 900 shares. What? How much rupees here? 4 rupees. So your wealth is 3,600 rupees before the rights issue was made. Yes or no? If there is no rights issue, you will be enjoying a company's wealth. How much rupees? 3,600. Right or not? Now, next. After rights issue. After rights issue, what happens is, you're holding how many shares? 900 shares. Are you holding 900 shares worth 4 rupees or worth 3.8? 3.8. Once the rights is over, the share price crashes down to what? 3.8. In that case, what happens is going to be sell all the rights, means existing portfolio, the current share value is 900 shares into 3.8. What the wealth? 3,420. No need to worry, you're having 300 rights or not. You sold that to your friend at how much paise? 60 paise. You'll be getting cash or not? Yes. How much cash you get by selling the rights here? 300 rights you are selling at how much paise? 60 paise. You'll be getting how much cash here? It is 180. 900 shares I'm having into 1 by 3 is what? The rights I'm going to have into how much paise? 60 paise. 180. Tell me what you said. Well, it continues to be same 3,600. Are you following or not? Only thing is, earlier enjoying the 3,000 rupees as what? Shares. Now you're enjoying as what? Shares. And then what? Cash. Which you got by selling your rights. Everybody accepted or not? Now. Situation number 2. Before also same, after also same. Okay. Situation number 2. I am going to sell only what? 50% of the right. Balance 50% of the right. I am going to exercise. Are you following or not? That means, how many rights are that? 300. In which I sell to you, how many shares? 150. I will myself buy how many shares? 150 shares. Can I see what is going to happen or not? In that case, what existing portfolio I am having how many shares? 900 shares. What, how much rupees here? 3.8. 3,420. Right or not? Next. I sell rights. 900 shares into what? 1 by 3 is the number of rights. In which I only sell how much? 50. How many rights I am selling? 150 rights. I sell 150 rights at what price? 60 paise. Tell me what is my money? 90. 90 share cash? Cash. Innappa, right or not? Yes or no? So, what happens is, 900 shares you are holding, in which 1/3 is rights issue, rights offered to you, having rights to how many shares? 300 shares, in which you sold only how many rights here? 150 rights, at what paise? 60 paise. This 90 rupees is what? Cash. Tell me this 3,420 rupees is investment. The investment account having what? Shares, investment 3,420, and this 90 is what? Cash. I am telling you personal balance sheet. I am telling you our personal balance sheet. Now, another 150 rights I am having or not? What I do? I exercise the right and what? Buy the share. Very simple. See what is going to happen. Suppose I am having a balance sheet. I am having 2 items. One is cash. Okay. And another, okay, so cash. I am going to exercise the right and I am going to what? Buy the share. Okay. When I buy that, becomes what? Investment. How many shares I am going to buy? Please tell me. 150 shares I am going to buy by paying how much rupees? 3.2. Tell me what is the amount here? How much rupees? 480. Cash goes out in my balance sheet 480. The cash vanishes. Bank account gets what? Debited in the passbook. The cash vanishes and it becomes what? I am not giving cash as donation to any beggar or somebody else. The cash becoming what? Shares. Now the cash has become how many shares? 150 shares. What how much rupees here? 3.8. How much rupees it is? Yeah, it becomes how much going to be? 570. The difference is what? 90. Yes or no? Now 480 cash has gone out of my balance sheet. It became what? Share. It is not becoming 480 rupees share. It became what? 570 rupees share. Is my balance sheet wealth increasing or decreasing? Increasing. Very simple. I am having in my pocket cash how much rupees here? 480 rupees. Okay. From this pocket, I took out the cash and gave to the company. The company gave me what? Share. How many shares here? 150. I put that 150 shares in my pocket. Now my pocket is heavier or not? And a 480 gone out, but what came in? 570, because I purchased a share worth 3.8 for what? 3.2. I'm making 60 paise increased wealth there. Yes or no? In that case, my wealth goes up by what? Another 90 rupees due to cash replacing what? A higher value share. Yes or no? Isn't it correct? Now, don't think like accountancy. In accountancy, the entry you pass is what? Investment account debit. to cash account credit, whatever you pay, you call as investment, yes or no? I pay, how much rupees? 480. I don't deny that. But I don't get the investment of 480. I don't record the book value of investment. My balance sheet is what? Market value. I pay 480 cash and get shares worth how much? 570. In that case, immediately on purchase of the share, my bill goes up by what? Another 90 rupees. Is that acceptable? Now, in that case, see, the third calculation is what? New share application. Very simple. I applied for how many shares? 900 into 1 by 3 into 50%. I applied for how many shares? 150 shares, which I purchased by paying 3.2. I got worth how much? 3.8. Due to this, my cash as an asset gets converted into investment, increasing my wealth by how much rupees? 90 rupees. So now tell me, what is my total wealth here? My total wealth is going to be 3,600. Change or doesn't change or doesn't change? Everybody respond, yes or no? No. Very simple. Tell me how this money are there here. What is 3,420? It is what? Investment. It is nothing but what? Investment. So I am crying because 3,600 investment became what? 3,420. I am crying. Yes or no? How I last stopped crying? Yeah. A baby is crying. When you will stop crying? Somebody gives it lollipop. Yes or no? Like that. Or chocolate. You know what I am saying? In that case, so I will stop crying when I get some money. So now how I get here? Number one, I sell the right and get a cash how much rupees? 90 rupees. I convert my existing cash into what? New shares and get the increase of how much rupees? 90 rupees. Now my wealth has come back to what? 3,600. I am happy or not? Yes, I have retained my wealth. Respond yes or no. So whether I sell the right or whether I want exercise the right, my wealth remain what? Same. When I sell the right, I just recover for the loss I suffer in my wealth. Yes or no? When I exercise the right, I myself become what? New shareholder. As a whole shareholder, I am going to suffer. As a new shareholder, I am going to gain. On an average, my investment is going to what? Even out, leaving my wealth unchanged. Yes or no? Isn't it correct? No. Third person is there. Yeah, he is sleeping like us in the class. He is sleeping in the class. He did not do what? Anything. What happened here? His portfolio lost. 3,420 rupees is a portfolio value. He is suffering a wealth loss of 180 rupees. Everybody, yes or no? That means the moral of the story is when a right letter comes, one should react. Anything comes from the company, we put in the waste paper mark. So whether it's a balance sheet or what, say any notification or any intimation, we have to really understand it. When they make a rights offer, understand that somebody new is going to come to your company at a diluted price. So no, in that case, either you become that person or what, charge that person some money. Are you following what I'm saying? If you do nothing, in that case, surely you will be suffering what? A loss in your wealth. Are you following not? That is why Companies Act gives the right to the execution. Why there should be a rights issue? Yeah? Because suppose we all have started one business. We are partners. Yeah? Okay, all have become a company. Okay. For 800 shareholder company. Can I say we all started what? Company. And we are doing a business. Company is prospering. Company is what? Prospering. Okay. Now, existing business prospering or not? We want to expand. We want to what? Expand. First we require new capital. Now, what happens is, suppose I unilaterally, without consulting you, allow some other person to bring the new capital. New shareholder will get the share only new wealth or all the wealth. But I cannot say old profit and only for us will be getting only what? New profit. I cannot say for I have to prepare a separate joint venture. You know what I am saying? In that case, if I allow the new shareholder to come into the company, he not only enjoys the EPS from the new project, he also enjoys what? EPS from the old project. He has to pay some money for it. Yes or no? And without asking if you allow new entrants, surely your wealth will get diluted because it's all your hard effort by putting capital. The wealth is greater or not. In that case, without your permission, I cannot allow a third person to come into the company. So no, when I give you that permission, you can be the new shareholder or you can sell that right to what? Some other person. Protect yourself before following the new shareholder. Yes or no? Or otherwise, if you don't want both, at least you get a special resolution from you saying that no problem, I am not worried about the dilution wealth at all. Let's go for the IPO. You should permit me. Are you understand what I am saying? Otherwise, current owners can allow what? New owners without getting the approval of them. Are you understand? That is why the rights issue is a right of each and every shareholder in the company. How you have a right to dividend? You have a right to what? Right shares also. Everybody following not. You have every right to participate in the new capital of company. Only if you cannot, you can just give it in favor of what? Some other person. Everybody following not. This we call as rights issue. Moral is, when rights issue comes, what a shareholder should do? He should react. He should be what? Reacting. If he doesn't react, what happens here? Wealth stands eroded. How can he react? Two ways. Either by selling his right or by subscribing his right. When you want to sell his right, you should value the right or not. Tell me what is the value of the rights here? X rights price minus subscription price, or the number of shares into market price before rights minus the market price after rights. To value the right, one should calculate X rights price is nothing but old wealth plus new wealth divided by old shares plus new shares is a scheme. Are you following or not? With this complete, one simple straightforward sum in rights issue. The next sum is much more interesting. Okay, so you have to copy the last part. Write down step 1, step 2 over na. Write down step 3. Impact of the right on rights on a shareholder holding 900 shares. Impact of rights on wealth of a shareholder holding. Impact of rights on wealth of a shareholder holding 900 shares. Impact of rights on wealth of a shareholder holding 900 shares. Everybody, can you proceed or not? In that right? First, existing wealth is equal to 900 shares into 4. Existing wealth is equal to 900 shares into 4. How much rupees? 3,600. 3,600. Can I proceed? Situation 1. Situation 1, sells all his rights. Situation 1, sells all his rights. Underline that. Existing portfolio. 900 shares is now worth 4 or 3.8? 3.8. 900 shares into 3.8, 3,420. 900 shares into 3.8, 3,420. Add proceeds from sale of rights. Add proceeds from sale of rights. Add proceeds from sale of rights. Can I straight away write 300 rights? I can understand or not? 300 rights. Now 1/3, 2:1 ratio, na? 1:3 ratio, no? So it is, how much that is? 300 rights into how much rupees? 0.6. 300 rights into 0.6. 180. Total wealth 3,600. Total wealth 3,600. Situation 2. Situation 2. Exercise 50% of right. Exercise 50% of the right and sell 50% of the rights. Exercise 50% of the right and sell 50% of the right. Can you start now? Existing portfolio. Existing portfolio. Tell me how many shares? 900 shares of 3.8. 900 shares of 3.8. 3,420. 900 shares into 3.8, 3,420. Add sales proceeds from right. Add sales proceeds from right. I am selling 300 rights, 150 rights, 150 rights. Add sales proceeds from right. 150 rights I am selling at 60 paise. 150 rights into 60 paise. is equal to how much? 90. And increase in wealth due to new shares. And increase in wealth due to new shares. Now we are going to buy new shares or not? And increase in wealth due to new shares. How many shares I am buying? 150 shares into what minus what? 3.8 minus 3.2. 150 shares into 3.8 minus 3.2. Tell me, why 3.8 minus 3.2? Why minus 3.2? 150 shares into 3.2, cash goes out, so my wealth decreases. Okay, then why into 3.8? 150 shares into 3.8, investment comes in, the wealth goes up by that number. So the net increase in wealth is how much rupees? 90 rupees. The increase in wealth is 90 rupees. Tell me the total is 3,600. The total is 3,600. Situation 3 does nothing. Situation 3 does nothing. Existing portfolio is equal to existing portfolio is equal to 900 into 3.8. Existing portfolio is equal to 900 into 3.8 rupees 3,420. 900 into 3.8 rupees 3,420. So from this, what is the conclusion? Conclusion. Shareholder should react to the rights offer. Shareholder should react to the rights offer by either selling the right. Shareholder should react to rights offer by either selling the right or subscribing for the new shares. By either selling the right or subscribing for the new shares. If he does nothing, the wealth stands eroded. If he does nothing, the wealth stands eroded. If he does nothing, the wealth stands eroded. Everybody have the clarity or not with this? We complete this particular question number 12 on the rights issue. Can we move to the next question or not? Next question is an RTP question, a very good problem. I will be learning more about this concept of rights issue. Take question number 13. Stop talking. Okay. See, when I read the question, follow the facts. Once you have the grip over the facts, answer becomes simple. Okay. Monopolo Limited has paid up share capital of rupees 2 crores, represented by 4 lakh shares of 50 each. I will open the page. Please, no sound. Can I proceed? Earnings after tax in the most recent year were 75 lakh rupees, of which 25 lakhs were distributed as dividend. The current price earnings ratio means PE ratio. What is the formula for PE ratio? MPS divided by EPS. It is 1 by KE. Is also KE only inverse of KE is PE ratio of these shares as normally reported in the financial press is 8. The company is planning a major investment that will cost rupees 2 crores 2 lakhs 50,000 and is expected to produce additional after-tax earnings over the foreseeable future at a rate of 15% on the amount invested. It was proposed by CFO of the company to raise the necessary finance by a rights issue to the existing shareholders at a price 25% below the current market price of the company's shares. You have been appointed as a financial consultant of the company and are required to calculate 1. Current market price of the shares already in issue, price at which the rights issue will be made, the number of new shares that will be issued. The price at which the shares of the entity should theoretically be quoted on completion of the rights issue, that is the ex-rights price, assuming no incidental cost and that the market accept the entity's forecast of incremental earnings. It has been said that provided the required amount of money is raised and that the market is made aware of the earning power of the new investment, the financial position of the existing shareholders would be the same whether or not they decide to subscribe for the rights they are offered. You are required to illustrate that there will be no change in the existing shareholders' wealth. That's a question which has been asked. Okay. A good problem, a comprehensive problem in the rights issue. We not only stick to the solution, we will discuss more about the solution with the help of the numbers. Okay. Please go through the question before we start with the solution. Please. I have given you time to read the question. Use the time. Try to understand the facts. Everything is a story. Understand that. See what is happening. Then we can just go for further discussion. Stop talking. படிக்கிறியாப்பா? Are you reading or not? Please. Shall I start up? Now, first of all, let us see the existing position of the company without rights. Okay. This company is having how many shares? 4 lakh shares. With this 4 lakh shares, it is currently doing a business or not? Please. Can you start? Company is at present having how many shares? 4 lakh shares. With this 4 lakh shares, it is currently doing a business. Yes. This current business is earning them, the current projects or the old projects are earning the how much return? 75 lakhs return. That happened in the current year. We expect to happen in what? Future also. Always know one thing. Current year earning 75 lakhs. Now, I assume that the projects will generate next year also what? 75 lakhs. Third year also what? 75 lakhs. To perpetuity, there is always an assumption unless I have an extra information. Always know one thing, if there is no extra information about growth or decrease, I assume that current projects will continue to earn what? Same profit. Very simple. If no other information about MTHGR is available, we presume that the same enrollment will happen in what? Next batch also. The same round will be what? Here. Don't say, sir, fees increase and all. Fees will increase, cost also will increase. Inflation is common to revenue and cost. So when I say earnings, I mean earnings in what? Real terms. Earnings in what? Real terms. In real terms, we assume the earnings should be perpetuity always. This assumption is there throughout our discussion unless to the contrary, any number is given. Everybody following not? Now, tell me, understand the present business. Presently, we are how many shareholders? 4 lakh shareholders. We are all earning how much profit? We will earn, we are earning. We will continue to earn how much? 75 lakhs profit throughout is the first issue. Right or not? And next is, the company is declared this year, how much dividend? 25 lakhs. That we can come back to that later. How much dividend is declared? 25 lakhs. And what is the PE ratio of this company? 8 times. For every 1 rupee EPS, the market is going to pay 8 rupees share price. Or you will find MPS by EPS. How many times here? 8 times PE ratio. Is the present situation. Everybody yes or no? No. From this, let us first calculate the market price of the company share. I'll go for more discussions and then go to the next stage. Okay. No need to copy. First participate. First. Part 1, I am going to calculate the current market price. What is earnings per share? Earnings divided by number of shares. Now, what is the earnings of the company? 75 lakh. It is shared by how many shareholders? 4 lakh shareholders. Every shareholder makes how much PAT? 18.75. This is a profit after tax available to every shareholder. Earnings per share is 18.75. What the formula for PE ratio? PE ratio is equal to what? MPS by EPS. Then what is MPS? EPS into PE ratio. Accept or not? So in the case, the market price per share is earnings per share into PE ratio. What is the earnings per share? 18.75. What is the PE ratio? 8 times. What is market per share? 150 is one way of understanding the market price per share. Respond. Are you all following or not? No. So the current EPS is 18.75 and MPS is equal to EPS into PE ratio. The share is worth today how much rupees here? 150 rupees is one way of understanding it. Can I proceed or not? No. For examination, this is enough. I'll just explain this other angles to just create what? Some clarity in the concept in all angles. Can I proceed? Now, see. Tell me, what is KE? 1 by PE ratio. Accept or not? What is KE? 1 by 8. How much percent? 12.5%. I can say like this. Investors from this company are requiring a return of 12.5. Every company changes, depends on the risk. How the KE is calculated, separate chapter in what? Portfolio. It represents risk of the company. Right or not? Investor from your company want how much? 12.5% return. Their required return is 12.5. Yes or no? Otherwise, if you give them 12.5 return, they'll give you 100 rupees price. Are you following what I'm saying? Now, next. Let us see what is the value of the company. What is the value of the company? Present value of the future cash flows. Present value of what? Future cash flows. Now, here, cash flow. Or present value of the future benefit. This company is going to earn how much rupees profit per year? 75 lakh. It is going to earn the profit for 1 year, infinite years, infinite. It is going to be a perpetual profit, 1 to infinity. How many lakhs here? 75 lakhs. Ennappa, right or not? In that case, I can say the wealth of the company is The company's wealth is nothing but the value of his assets. What is the value of the asset? Present value of the future benefits. What benefit the asset is going to give the shareholder? 75 lakh. It is a single benefit, a perpetual benefit, a perpetual benefit. What is the formula for perpetuity? Cash flow divided by KE. The R here is what? KE. The required rate of return. If the bond is value, if I want to discount coupon, I discount at what? YTM. But if I want to discount share, discount at what? KE. That's the understanding. Yes or no? What the cash flow I am going to get? 75 lakh. What is KE? 12.5%. Tell me what is 12.5%? 6 crores. That means 600 lakhs. 600, 00, 000 is the wealth of the shareholders. Yes or no? This is a wealth belonging to one share. So many shares. This wealth is shared by how many shares? 4 lakh shares. That means I can say the market price per share or the value per share is how much here? 6 crores. 600, 00, 000. How many lakh shares? 4 lakh shares. For the price per share? 150. That's how I got the market price of 150. Everybody, yes or no? No. This is another alternative way of understanding the market price of 150. Another way of understanding is very simple. What is EPS? EPS is 75 lakhs divided by 4 lakhs. What is EPS? 18 point. Okay. Now, you are buying this company share. Here, cash flow. When you buy this company share, when I say cash flow, I mean what? Benefit. I'm going to get how much benefit? 18.75 benefit. For 1 year or 2 years, infinite years. I'm going to get 1 to infinite years EPS, yes or no? I'm going to get for 1 to infinite years the EPS, yes or no? This 18.75 is something but what? EPS. Tell me what is the value of the share, present value of the future benefit. The future benefit is what? EPS divided by what is our KE. EPS by KE is what here? 18.75 divided by 12.5% gives how much base here? 150. Instead of saying EPS by KE, 1 by KE is what? PE ratio. It is also what? EPS into PE ratio. Gives you the same answer. Everybody following or not? Now, whatever you may think, the share value is 150. What is share value here? 150. Tell me, it is not that I am unnecessarily doing what? 3 things. I gave you 3 ways in which what? You understand the share price of the company. Tell me first, how I found out share value in the first instance here? I found out EPS as 18.75. EPS into PE ratio gives you the MPS. Method number 1. Yes or no? Why PE ratio is equal to MPS by EPS. EPS into PE ratio gives you what? The MPS. Is one way of finding out the market price of the company share. Yes or no? No. Second, what is the value of a company here? The value of a company is the present value of the future benefits. When I buy the share of this company, the company earns for a shareholder how much profit? 75 lakhs profit. For all the shareholders giving 75 lakhs profit this year or next year or forever, forever. We assume that same business will continue forever, earning what? Same profit. So the present value of the future profit is the value of the assets of the company. Yes or no? You know, the assets are used to generate this profit. The value of the asset is what? Present value of the future profit. The value of the asset to the company shareholder is how many crores here? 6 crores. This company value is shared by one shareholder. 4 lakh shareholders are 4 lakh. The value per share is 150. Third is you can see the same thing in an individual shareholder basis. Individual shareholder gets 18.75 for every share. So no, he gets his earnings for what? Perpetuity. The present value of the perpetual earning is 150. Is one should understand the value of the share. Very simple. What is the value of the company shares? 150 rupees. Step number 1 over. Right or not? Can I proceed further? Next. Okay. At present, the company is having a wealth of how many crores? 6 crores. And the shareholder is enjoying how much price? 150. And they are doing a current project. Right or not? Now, company is satisfied with the existing projects, wants to improve. It wants to make new investment or not? Yes. For that new investment, how much money is required? 2 crores, 2 lakh 50,000. Now, this 2 crores, 2 lakh 50,000 investment for which requires money or not? The question says, I am not saying, the question says the entire 2 crores, 2 lakh 50,000 money is going to be raised through rights issue. It's going to be raised through what? Rights issue. Now, I have a better option for the company because they declared 25 lakhs as what? Dividend. 50 lakhs redundancy is there or not? Now, they are not touching that. We'll see what happens if the redundancy is what? Used later. I stick on to the question, okay? Don't question the question. The question says what? I want 2 crores, 2,50,000 rupees for my new project or not. That entire money, I'm going to raise through what? New issue, public issue, rights issue, rights issue, I'm going to make. Yes or no? When the issue rights says, I should fix a price for the issue or not? They said the price is going to be 25% lower than the current market price. What the current market price? 150. Are they going to issue the right shares at 150? No. They will issue at what? 75% of this price. No, I saw no. How last problem, 4 rupees shares, they went for rights issue for what? 3.2. Like they're going to issue the rights at a lesser price. So the next question is very simple. What is the rights issue price? It is 150 into 75%. How much is the rights issue price? 112.5. Are you all keeping track of the number or not? No. So the rights issue price is 112.5. Up to this, everybody following up? No. Now we have to calculate number of rights shares to be issued. Very simple here. How much money I want? 2 crores 2,50,000. Every share issued how much price? 112.5. How many rights shares to be issued? 1,80,000 shares. Very simple. At present, I am running a 6 crore rupees business. A business worth how much? 6 crores. With how many shareholders? 4 lakh shareholders. Everybody enjoying how much rupees? 150. Now, I want to expand my business by raising new capital for how much rupees? 2 crore 2,50,000. The new capital is going to be issued by issuing new shares, by public issue, rights issue, rights issue. The rights issue is made at how much rupees? 112.5. How many new shareholders are going to come? 1,80,000 shares. Up to this, are you following or not? Before I put the next calculation, let me do in the sheet and then what proceed further. Okay. Now, we have to find out X rights price. Did we find out in the previous sum or not? We have to find out X rights price. Okay. See. X rights price, I have to find out. Okay. How you normally find out old well plus new well divided by old share plus new share. Correct? Now tell me, what is the existing wealth here? I'm having how many shares? 4 lakh shares. 150. How many crores here? 6 crores. 600 00 000. Ennappa, right or not? Now, next is what I'm going to get here? New wealth. And how many shares are going to come? 1.8 lakh shares. They're going to bring how much rupees? New cash coming in or not? 112.5. You're going to how much it is here? 2 crores 2,50,000. Now, 1 0 extra? Okay. Now tell me, my wealth is 6 crores, more or more? What is the total wealth of the company? 8 crores 2,50,000 is the total wealth, right or not? Now, this total wealth is share by 4 lakh shares, more than 4 lakhs, more than 4 lakh. This is the extra price. How much here? 8 crores 2,50,000 divided by 5,80,000. 5,80,000 is how much going to be? 138.36 is the exchange price normally we calculate, right or not? This is wrong. This is exchange price. This is what? Wrong. Okay. I'll say why it is wrong. What is difference between the previous sum and this sum? I'll take my discussion back to Modigal and Miller once again. Everybody following not? Now, this calculation is wrong. I'll tell you the reason. See. Dividend, not at all. Dividend is irrelevant. That's what I'm saying. Now, let us see what is going to happen here. 1.8 lakhs, the shares, new shares are issued to the company. How much cash came? 2 crore 2,50,000. Respond, yes or no? My question is the company going to keep this 2 crores 2,50,000 rupees as cash? It's going to make us projects. It is going to become what? A project. The cash is going to return only for 1 day maximum. It is going to be converted into what? Projects. They are going to make investment. For that only the money is raised. Yes or no? Now, what happens is cash coming in, maybe what? 2 crore 2,50,000. When the cash become asset, is asset 2 crore 2,50,000 now? No. Already we saw that in accountancy, we buy an asset, I pass entry what? Asset to cash, the same money, because what I invest is a value, but for me the asset value is not how much I invest. Asset value is what? The present value, the future benefit from the asset. Yes or no? So what happens is very simple. You are the right shareholder. You are what? The new shareholder. You are coming into the company by bringing to the company how much money? 2 crore 2 lakh 50,000. I am the company. I get from you how much money? 2 crore 2 lakh 50,000. This money what I will do? I put in the project. I put it in what? Project. When I put in the project, I may put 2 crore 2 lakh 50,000 in the project, but is a project value 2 crore 2 lakh 50,000? No. The value of the project is not the amount they invest. The value of the project is what? The present value, the future benefit of the project. Respond, yes or no? This always one should remember. Everybody follow or not? In that case, let us see how to calculate the value of the new project. Can I proceed? I'll just write it here. See, very simple. New project is going to give me an additional earnings or not? Spelling correct, Abba? Getting confused? Earnings, okay. 2 crores, 2 lakh 50,000. How much it is going to earn? The IRR, which we call as R in Walton Garden. Yeah, no. The R is how much percentage here? 15%. The new project is going to give me how much percent? 15%. On how much investment? 2 crore 2 lakh 50,000. Tell me the annual earnings on new project is going to be how much going to be? Developer? 30 lakhs? 37,500. This is the earnings the project gives every year. Yes or no? This earnings is going to be for 1 year perpetuity, because when I start the new project, they don't give you anything. I assume to be what? A constant earnings. That's always an assumption, right or not? In that case, very simple here. Year cash flow. 1 to how many years? Infinite years. What am I going to earn? 30 lakh 37,500. What is the value? Discounted cash flow is equal to what? Cash flow by R. What is cash flow? 30 lakh 35,000. What is R here? 12.5%, because we know that they expect how much percent? 12.5%. Tell me what the project value? 2 crores 43 lakhs. 2 crores 43 lakhs. Very simple. You give me a cash or 2 crore 2 lakh 50,000. I don't keep that cash as cash. I convert into what? Project worth how much? 2 crores 43 lakhs. Everybody, yes or no? That means the new money coming in is what? 2 crore 2 lakh 50,000, not 2 crore 43 lakhs, 2 crore 43 lakhs. In this case, it is wrong to write as 2 crores 2 lakh 50. How to write as what? 2 crores 43 lakhs. So the wealth is not 8 crores 2 lakh 50, becomes what? 8 crores 43 lakhs. Everybody, are you comfortable or not? Now, very simple. Why? Due to rights issue, the project gets positive NPV now. I expect how much percent? 12.5. But the project expected how much percent? 15%. That means NPV should be what? Positive for the 2.5% not. IRR 15%. Cost of capital 12.5. I get the money at 12.5% cost. I'm going to invest at what? 15% return. 2.5 margin creates a positive NPV or not? Positive NPV will be put into the price after the NPV is earned, as soon as you know about the NPV. Again, I say share price is not for what has happened. Share price is for what? What is expected to happen. As soon as I know that I'm going to start this project, I know I'm going to earn an NPV of 243 lakhs minus what? 202.5 lakhs. This NPV also goes to increase the share price. Respond. Are you following or not? No. In the last sum, I wrote the money that came in. Last sum, 1 share into what? 3.2. I wrote 3.2 or not? Because they did not tell me what I am going to do with that money. In the previous sum, I made a rights issue or not? How much rupees? 3.2 rupees rights issue. 4 rupees into 3, 12 rupees old wealth. That is no change for the same here also 6 crores. But what is the rights issue? 1 rights. For how much rupees? 3.2. I got 3.2 new wealth or not? I did not know what I am going to do with what? 3.2 new wealth. I assume the NPV to be what? 0. You can just satisfy my shareholder. Hence I took it as what? 3.2. Here I cannot do so because NPV cannot be assumed to be what? 0, because I am getting a 12.5. I am investing at what? 50. I will be having what? Positive NPV. That should also be factored in while fixing the share price. Are you following or not? Now, in that case, now I am going to calculate the extra price. Now, see. I will tell the calculation like this. Say whether I am right or not. Extra price is equal to, what is the old number of shares? 4 lakh shares. What is the old price? 150. Plus, what is the new number of shares? 1,80,000 shares. What is the price? 112.5. Normally, this plus is divided by what? O plus means answer no. Now, in this, I'm going to have one extra number, R by KE. What is R? 15%. What is KE? 12.5. Walter formula, yeah? R by KE. Into the new investment. E minus is new investment or not? Like that. R is what? 15%. KE is what? 12.5. On this 2 crore 2,50,000, again how much return? 15% return. For 1 year or forever. Capitalized by what? KE. I get the value of the new investment. Yes or no? Whole divided by what the whole number of shares? 4 lakh. For new number of shares? 1.8 lakh. That gives the share price. Everybody, are you following or not? Now, very simple. In the last sum, since I don't know the R and then KE, I assume both are going to be what? Same. Hence, I write the cash brought in as itself as what? New wealth. But if I know about the return on investment, then the new wealth is not only the money coming in, it is also what? The NPA from that money. Respond yes or no. So, if it is only cash, value of 1 rupee today is how much? 1 rupee. But value of 1 rupee invested in a project earning 15% is not 1 rupee. It is 1 rupee into what? 15% divided by 12.5% is what I want to expand it. Everybody, are you following the answer? Huh? Now, let me go for the solution now. Tell me, part 4 is exercise price. You should tell me what is exercise price? Old well plus new well divided by old share plus new share. No change. Those who are not following or sleeping, now listen, wake up. Tell me exercise price. What is the exercise price? Tell me. Old well plus new well divided by old shares plus new shares. What is old well? 6 crores. How 6 crores? 4 lakhs into 150. New well, how much coming? 2 crores 5 lakhs. One new well 2 crores 5 lakhs. The 2 crores 2 lakh 50,000. Sorry. New well, how much coming? 2 crores 2 lakh 50,000. Is this 2 crores 2 lakh 50,000 sitting in cash going to become investment? As soon as I make it investment, is it 2 crore 2 lakh 50? Much more. You think how much investment? 2 crore 43 lakhs. How I know the value of the 2 crore 43 lakh, present value of the future benefit? This 2 crore 2 lakh 50,000 rupees is going to get how much percent? 15% return of 30 lakh 25,000 money forever. The present value capitalized how much return? 12.5 gives you 243 lakh. Yes or no? Very simple. I get from your cash for 250,000. I convert into what? Asset was what? 243. That means a new wealth is 2 crore 2 lakh 50 or 2 crore 43 or 2 crore 43. Old wealth 6 crores. New wealth what? 2 crore 43 divided by what the old shares? 4 lakh. New shares is 1.8. That gives the exercise price. Are you following or not? Now, this calculation, last problem calculation will be different or not? Why I did not do this in the last problem? Because I don't know R, I don't know KE. I don't know what is that they are expecting. I also don't know what is that the project is going to give me. In that case, I assume that I will be able to get what you expect. If you expect 12.5, I will be able to earn what? 12.5. In case NPV is what? 0. So what you give becomes a new wealth. Everybody following on clarity now. So this is the calculation. Then exercise price is 4 lakhs into 150 plus 1 lakh 80 into 112.5 plus 15% divided by 12.5 divided by 4 lakhs plus 1 lakh 80. The second part is similar to Walter formula. Right or not? R by KE, same thing, just using it here. This is going to give me how much rupees? It is going to give me extra 145.34. Please respond up to this. Are you following? Just copy up to this and write notes up to this before you go for the last discussion. Okay, now please write down part 1. Don't talk, please. Finish copying, huh? Finish copying. ஒண்ணுமே இல்லையா? MPS is EPS into PE ratio. That's all. Can I see it now? Write down notes. Notes. Understanding the current share value. Notes. Understanding the current share value. Understanding the current share value. Underline that. Point number 1. P ratio is equal to 8 times. Therefore, KE is equal to P ratio is equal to 8 times. Therefore, KE is equal to 1 by 8. Now 1 by P ratio KE na, therefore KE is equal to 1 by 8 is equal to 12.5%. K is equal to 1 by 8 is equal to 12.5%. Continue. That is, for the company of this risk class, that is, for the company of this risk class, the shareholders wants, for the company of this risk class, the shareholder wants, how much for return? 12.5% return. For the company of this risk class, the shareholder wants 12.5% return. Point number 2. Value of equity is the present value of future benefits. The definition will be saying throughout the session. Okay, value of equity is the present value of future benefits available to shareholders. The present value of future benefits available to shareholders. Have 2 columns, year cash flow. Have 2 columns, year cash flow. 1 to infinity. Because always the company gives PAT to the shareholder. Yes or no? 1 to infinity. What the company gives to the shareholder? 75 lakhs. 1 to infinity, it gives 75 lakhs. I am going for earnings approach value. I don't say present value of dividends. I say present value of the earnings, benefits. Okay, 1 to infinity, 75 lakhs. DCF is equal to discounted cash flow is equal to fill in the blanks. What by what? 75 lakhs divided by 12%. Cash flow by KE. DCF is equal to cash flow by KE. 75 lakhs divided by 12.5%. 75 lakhs divided by 12.5% is equal to how many crores? 6 crores. DCF is equal to 6 crores. 6 crores. Now, the value of all the shareholders, how much here? 6 crores. I don't point number 2 or 3 here? 3. Value per share is equal to 6 crores divided by 4 lakhs. And it is a value for 4 lakh shareholders now. Value per share is equal to 6 crores divided by 4 lakhs. What is the value per share? 150. Value per share is equal to 150. Everybody, yes or no? Already understand, no? EPS by K also gives you what? The same number. Just leave it. Can I proceed or not? Next. Part 2. Rights issue price. Rights issue price. 150 into 75%. Finished? 150 into 75% is equal to 112.5. Slide over. Can you proceed? Part 3. Number of right shares issued. I want to raise how much money? 2 crore, 2,50,000. By issuing a share at 112.5, how many right shares should be issued? 1,80,000. Number of right shares issued. Finish copying, huh? Can I proceed? Now, X rights price. Part 4, theoretical X rights price. You can copy this, then you can have that notes. Theoretical X rights price. Finished, huh? Stop talking. Finish copying, huh? Those who have not copied, raise your hand. Yeah, yes or no? Yes. Okay, now write down notes. Notes. Point number 1. Understanding the extra price now. Okay, point number 1. Existing wealth. Point number 1. Existing wealth is equal to 4 lakhs into 150. Existing wealth is equal to 4 lakhs into 150. How many crores? 6 crores. Existing wealth 6 crores. Now, the another way right to understand 6 crores is existing projects are giving me how much return? 75 lakhs. And how much I expect? 12.5. So the existing wealth is a present value of the existing projects or not? Which is going to be how much crores here? 6 crores. That is only represent as what? 4 lakhs into 150. Are you follow what I am saying? Now, next, add additional wealth. Add additional wealth due to new project. Add additional wealth due to new project made through rights issue. Add additional wealth due to new project made through rights issue. Add additional wealth made through new project due to rights issue. Yes or no? Now, write the number straight away. 2 crores 43 lakhs. Write the number 2 crores 43 lakhs. We'll write the calculation separately through explanation. Okay, 2 crores 43 lakhs. At present my wealth is 6 crores. The new wealth through what? New project started using what? Right, see how much is 2 crores 43 lakhs. Total wealth. What total wealth? 8 crores 43 lakhs. Total wealth 8 crores 43 lakhs. 8 crore 43 lakhs. Respond. Can I proceed? Point number 2. This total wealth of 8 crore 43 lakhs, second point, this total wealth of 8 crores 43 lakhs is now to be shared by, how many shares? 5,80,000 shares. Is now to be shared by 5,80,000 shares. Hence, the extra price is Hence, the extra price is 145.34. Hence, the extra price is 145.34. Can I proceed above? Next, point number 2 or 3 or 3. Through rights issue, we raised only 2 crores 2,50,000. Through rights issue, we raised only 2 crores 2,50,000. Then how then how additional wealth became? Additional wealth became how much? 2 crores 43 lakhs. That's a question, no? Then how additional wealth becomes 2 crores 43 lakhs. Additional wealth became 2 crores 43 lakhs. Question mark. Are you following my question or not? Write down the answer. The money raised is invested in project. The money raised is invested in project giving an IRR of how much percent? 15%. A project giving IRR of 15%. In other words, the project is expected to give. 15% into 2 crores 2 lakh 50,000. The project expected to give 15% into 2 crores 2 lakh 50,000 is equal to how much the base? 30 lakh 37,500. The project is expected to give 30 lakh 37,500 earnings perpetually. In other words, the project is expected to give 30 lakh 37,500 earnings perpetually. How I got it? 2 crore 2 lakh 50,000 into 50% earnings perpetually. Full stop. The present value of this perpetuity is the value of the new investment. The present value of this perpetuity is the value of the new investment. The present value of the perpetuity is the value of the new investment, which is, tell me what divided by what? 30 lakh 37,500 divided by 12.5%, which is 30 lakh 37,500 divided by 12.5%. Is how much? 2 crores 43 lakhs, which is 2 crores 43 lakhs. Now did you understand why it became 243 lakhs? Now, write down point number 3 or 4? 4. In other words, the new investment is, 2 crore 2 lakh 50,000. In other words, the new investment is 2 crores 2 lakh 50,000 and its NPV is, the new investment is 2 crore 2 lakh 50,000 and its NPV is, can you tell me the difference here? 2 crore 43 minus 2 lakh, how much is going to be NPV? 40 lakhs 50,000 and its NPV is 40 lakh 50,000. The new investment is 2 crore 2 lakh 50,000 and its NPV is 40 lakh 50,000. Full stop. The positive NPV is because R greater than KE. The positive NPV is because R greater than KE. That is 15% greater than 12.5%. That is 15% greater than 12.5%. 15% greater than 12.5%. Understand that we are not looking into the numbers, looking beyond the numbers. Everybody following not? Now, exam, the earlier computation, that is what is given in the RTP and nothing given in RTP is the answer. 4 lakhs into 150 plus what? 1 lakh 80 into 112.5 into 15 by 12% divided by 4 lakh plus 1 lakh 80. One should know why last problem done that way, this problem done this way. What is the relation between last problem and what? Current problem. Everything needs to be understood or not? For only so much elaborate discussions are made. Not problems, but really understanding the markets. Can I proceed or not? Now, next. Shall I move to the next part or not? Problem not yet over. Still lot of issues to be discussed. Now, next. Normally, in rights issue sum, it is the last sum or not? How many questions were asked? Last question we did now, question number 12. Good morning, friends. Okay. Last question, 12th question we did or not? Can I proceed? So last one we did or not? In that, how many questions we answered? How many questions here? 3 questions. That you answer or not? Look at my finger and answer. Yeah, I don't know. No. In that, first question is, they ask you extra price. That we calculate as m into n plus r into s by m plus r. Is or no? Now, same way we calculate here also what? Exchange price. Only difference is r into s divided by r by k you use it. That is the only new difference. I don't know. So, exchange price we calculate or not? Now, tell me the remaining 2 questions. They ask you to calculate the rights value. Ask you to calculate what? Rights value. They also ask you to discuss about the wealth of the shareholder. There we have 900 shares. Same way, this question has got 2 more parts. One part is what? Rights value. At what price the right should be sold is the rights value. And the third part is what? What happens to the wealth of the shareholder. Those 2 parts I can answer very quickly now, but I have some extra discussion to make with that number. Can I proceed or not? Which is beyond the RTP solution. Can we start or not? Now, very similar, very simple. Yeah. Extra price. What is the rights value? Tell me. You are the right shareholder. Okay. You are paying how much rupees to buy my company share? 112.5. You are the new shareholder now. How much you pay? 112.5. And how much, what is the value of the share you get? 145.34. Because after rights, the share is worth how much? 145.34. Other words, you pay 112.5 to buy a share worth what? 144.34. That means you should pay me some price for the right or not? For the exchange price, what is the rights value? Exchange price and a subscription price. As simple as that. Respond yes or no. This is also correct value. I have some more discussion to make. I'll discuss at the end of this problem. Can I proceed right now? Next. Step 2 or step 3. I don't want to part 5. Okay, part 5. Part 5, right. Rights value. Part 5, rights value. Rights value. Can I proceed? Underline that. Value of right is equal to what minus what? X minus S. Value of right is equal to x minus s. What is x here? 145.34. The company share is worth now 145.34. He purchased the share by paying how much rupees? 112.5. 32.84. 32.84. The exchange price is 32.84. Respond everybody. Following or not? No. Before I proceed, let us have a rights ratio understood. How many existing shares? 4 lakhs. And what are the rights shares? 1,80,000. Can I say it is 20:9? Accept it. Everything divided by 20,000. I get what? 20:9 is the ratio of what? The rights. That is, for every 20 share you are holding, you will be getting how much here? 9 rights. Okay. I don't want to keep it in decimals. Hence, write as what? Last one is going to be 3:1. So, for every 3 shares, you get what? 1 right. Now, it is going to be what? Every 20 shares, we get how many rights here? 9 rights. Is the rights ratio also we understood, right or not? Now, let us go for discussion. Now, you are a shareholder holding how many shares? 20 shares. You are a shareholder holding how many shares here? 20 shares. You will be getting how many rights? 9 rights. You can either sell the rights or what? You exercise the right. Yes or no? Don't say I will do nothing, then you will be losing only. Now always a person has to what? React to the right. You are intelligent, you already discussed on some or not. So you became intelligent, you have to what? React to the right. You can either apply for the rights or what? Sell the rights. Let's see what is going to happen. Okay. See. Assume that a shareholder is holding how many shares? 20 shares. Rights value is going to be x minus 112.5. That is going to be 32.84. Now only you said. And let us take 2 cases. Opt for the rights. Next is what? Sell the rights. Can I proceed up? No. Before the rights issue, let us see as well. He is holding how many shares? 20 shares. Every share is what? 150. Yes or no? In that case, what is his portfolio value? 3,000. Before the rights issue has been made, with the existing business, he is enjoying how much rupees well? 3,000 rupees well. Can I proceed? Now, rights issue made or not? Now, in that case, his wealth is going to remain same or increase or decrease? Answer my question here. Now, when he reacts, when he what? Reacts to right, will the wealth change or remain same? Let us see what happens and then comment. Can I proceed or not? Now, see. Existing portfolio. He continues to hold how many shares? 20 shares. At how much rupees? 145.34. He is going to get how much? 2,906.8. Nothing he did. Not 2,906.8 is well stands eroded. Yes or no? He reacted to the right or not? Yes. He purchased new share, sold the right, purchased new share. Anyhow, the answer is going to be what? Same. How many shares is going to purchase? 9 shares is going to purchase by paying how much rupees? 112.5. Worth how much? 145.84. A share, that is, he is going to give a cash of 112.5 and get a share of what? 145.84. His wealth is going to increase by what? 32 point some number, that is 32.84. So the new share is going to give me a wealth of 295.56. Everybody yes or no? Now that means he is going to have a total wealth of 3,202.56. Yes or no? Due to rights issue, existing shareholder wealth increases or decreases? Increases. Why? We'll be seeing later. Can I proceed or not? Now his wealth is what? Increasing. Can I proceed or not? Now. In other words, suppose he says, no, I don't want to buy the new share, I'll sell my right. Yes or no? In that case, when he sells his right, tell me what is existing portfolio value? 2,906.80. Number 2 is, he is going to get cash for every right. How much rupees? 32.84. So how many right shares here? 9 shares. That's a small, that is cash going to be how much here? 9 into 32.84. All the cash going to get 295.5. Still the wealth is what? 3,202.36. Yes or no? Whether he exercise the right or sell the right, his wealth now becomes what? 3,202.56. Point number 1. Accepted. I'll tell you why his 3,000 rupees wealth became what? 3,202.56. What the implication and what should be the correct value for right? I'll discuss the next stage. Up to this, are you following now? RTP answer over. With this answer is what? Over. But for us, more discussion needs to be made. I have to make 3 discussions. Is this 32.84 correct question? Okay. In my view, it is also wrong. There has to be some correction that needs to be made. We'll discuss that. Point number 2. The company is declaring 25 lakh dividend or not? 40 unnecessarily keep retaining or not? What should be done with that is the next issue. And whether dividend should be given or not is what? Third issue. All this beyond the scope of the sum, but still what? We'll discuss for the understanding of the concepts. Now, the sum is over. From this, I want to make things simple. You are listening and then terrified. No. Listen, rumba simple. Last sum, this sum, same. Last sum, this sum, what? Same. Only change is m into n plus r into s divided by r m plus n. One small change is m into n plus what? R into s into r by ke. It's not because I invested what? R percent for what explanation? Ke. Last sum it has not given, so r is equal to ke. Coefficient as what? 1 assumed. That's the only change in calculating extra price. Remaining calculation are same. What is rights value? X minus S, no change. And this calculation also what? No change. That's the only change as per the RTP in this sum. Everybody accept or not? But for other change, deeply we understood the consequence of the logic by linking what we discussed in the Modigle and Miller. Everybody following or not? Now, you can copy up to this before you make some interesting observations and then conclude the sum. Okay. From where you have to copy here? This is over now. This is over, na? Part 5 over. Part 5 is what? Value of the rights. Next, right? Part 6. Write down. Part 6. Effect on shareholders' wealth. Part 6. Effect of rights issue on shareholders' wealth. Effect of rights issue on shareholder wealth. Effect of rights issue on shareholders' wealth. Underline that. The ratio is, right? The ratio is, let's first fix the ratio now. The ratio is, what is to what? 4 lakh is to 1 lakh 80,000. the ratio is 4 lakh is to 1 lakh 80,000. 4 lakhs is to 1 lakh 80,000. Or what is 1? 20 is to 9. The ratio is 4 lakhs is to 1 lakh 80,000 or 20 is to 9. This means for a shareholder holding 20 shares, this means for a shareholder holding 20 shares, he will obtain, for a shareholder holding 20 shares, he will obtain how many rights? 9 rights. For a shareholder holding 20 shares, he will obtain 9 rights. Okay, can I proceed on? Right now, in that. Existing wealth is equal to, continue writing, existing wealth is equal to, what into what? 20 shares into 150. Existing wealth is equal to 20 shares into 150. We assume the shareholder is holding how many shares here? 20 shares. Let's take one shareholder, 20 shares into 150. What the existing wealth? 3,000. Existing wealth is equal to 3,000. Situation 1. Exercise rights. Situation 1. Exercise rights. எந்த EPS பா? புது EPS. See, ரொம்ப simple, yeah. What happens is, EPS gets diluted. We are going to merge. Already I'm having a 75 lakhs EPS. I'm having a 75 lakhs earnings. I'm going to get further what? 30 lakhs, 37,500 earnings. You capitalize the total earnings by what? 12.5%. 12.5% expectation. Yeah, it does not depend on EPS. For the company of this risk class, you expect what? 12.5. What you earn ultimately is EPS. Understood? KE does not depend on EPS. Understand that first. 12.5 independent thinking. Yeah? Old shareholder also wants 12.5. New shareholder also wants what? 12.5. Because same business risk will not change. So the full earnings by what? 12.5 gives you the new value divided by number of shares. If you don't like it, very simple. 75 lakhs plus what? 30 lakh 37,500 divided by 5 lakh 80,000 shares gives you what? New EPS. Divided by 12.5% gives you what? The same 145.34. Everybody, have you finished writing? Next, situation 2, sells all the rights. Minutes. Now only switched on AC. 5 நிமிஷம் है. Finish copying, please. Stop talking. Over up. See, problem is completed, but I am going to make some more discussion about dividend effect as well as the NPV and other issues. Okay. Let's discuss one by one. I'm going to discuss 3 points now and then give you notes before you complete this sum. Okay. Stop talking. Can you start or not? First question is 3,000 rupees wealth of my current shareholder became 3,202.36. Yes or no? About rights issue did not retain the wealth for the current shareholders, it increased the wealth. In the last problem, the wealth was what? Retained. If you remember 3,600 rupees last problem, 900 into 4, the wealth was what? Retained. But now the current shareholders' wealth has what? Increased from 3,000 to what? 3,202.36. The question is, why it has increased? Is it justified? This is question number 1. Are you following or not? No. Very simple. The first point I am now going to discuss is about wealth increase of what shareholder? Okay, wealth increase of existing shareholders is what I am going to at present discuss. Everybody yes or no? Romba simple, yeah? See, what is the NPV of my new project? I am having a new project, no? Invest. I invested 2 crore 2,50,000. I got how much? 2 crores 43 lakh. What is the NPV of the new project? 40 lakh 50,000. Divided by, let us say, only the old shares. Only by what? Old shares. What is the old shares amount? 4 lakh shares. Tell me, what is the NPV per share? How much going to be? What number is 10 point? 10.12. Okay, 10.125. Every old share is having NPV how much? 10.125. Our investor is holding, how many old shares here? 20 old shares. In that case, what happens is, for 20 shares, it is 20 into what? 10.125. Can you multiply and tell me what is the number? 202.50. Leave the decimals, all approximations. I got how much? 202.36. Now it's going to be 202.50. This is the calculation. From this, I come to a conclusion that new projects NPV is fully enjoyed by the old shareholder, giving 0 NPV to the new shareholder, right shareholder, yes or no? And now if you look at this, the entire 40,50,000 amount is not shared by 5,80,000, it is shared by what? 4 lakh. Then only will be getting what? 10.125. For 20 shares becomes what? 202.5. The 3,000 rupees became what? 3,202.5 because for every share the old share is holding, he is getting what? 10.125 extra NPV. For his 20 is how much he got here? 202.36. That means if I price the rights at how much rupees? At what? How much rupees here? 32.84. The meaning is entire NPV from the new project is cornered only by what? Old shareholder, leaving 0 to new shareholder. Yes or no? Is it fair or unfair? I don't say new shareholder gets 0 return. A wrong interpretation. New shareholder wants 12.5% return. He will be given his 12.5. That's all. Yes or no? He wants 12.5% return or not? Correct. What is KE? 12.5. What is IRR? 15%. You want 12.5. I earn 15. You get 12.5 or 15 or 15. 2.5 extra you get or not? But what they do is, the old shareholder corners the NPV portion. Corners what? NPV portion. He satisfies his 12.5% also, and also corners what? The 40,50,000, 2.5% NPV. New shareholders gets only what they want. How much it is here? 12.5. They are given 0 share of NPV. If I price my rights, everything is only happening through what? The rights price. X minus S no. If I price my rights at this price, what happens is the NPV is cornered by the new share, the old shareholder fully. Respond yes or no? New shareholder may say, see, I am also giving money or not? By investing in 15% project or not? See, I should also get a share of what? NPV. He may ask or not? Isn't that correct? Now, 2 ways of understanding it. One way interpreting is, the old shareholders may say, see, this is my business. I have created the momentum. I have created what? Momentum. You want the 12.5%? Take it home. I will satisfy you. But the remaining extra is what? Because you are not starting a new business, you are joining what? Existing business. This project is only created synergy through what? Current project. I can argue that I can take what? The 2.5% NPV. If that is the argument, if it is true, I don't say it may, it is true, then this rights price is what? Absolutely okay. Right price is what? Absolutely okay. I can price my rate at what? 32.84. Due to this right price, what happens is, I'll be getting how much NPV? 202.34 for the 20 shares, or per share NPV is this much. The entire NPV is cornered by what? Old shareholders. Now, suppose I think the other way around. I think what? Other way around. In other way, see. 32.84 is the rights price or not? In this, there is also an NPV of 10.125. If I knock this off, I'll be getting a current as a price without, that is NPV can be passed on to what? The new shareholders. Right or not? Now, I'll say like this. Instead of comparing like this, let us see the alternative way. Okay. In this approach, the NPV share by what? Old shareholders. See, 40,50,000 is the NPV. This NPV is earned for how many rights? 1,80,000 rights. Right or not? 1,80,000 new shares. How many? 1,80,000 rights. Tell me, what is the NPV per right? Tell me, 40,50,000 divided by what? 1 lakh. What is NPV per right? 22.50. Number correct about 22.50. That means, in this rights price of 32.84, the NPV per right is how much? 22.50. The rights without NPV is how much? 32.84 minus what? 22.50. Can you tell me the price of the rights is 32.84 minus what? 22. How much? 10.34. Everybody, are you following or not? In other words, if I price a right at 10.34, then the entire NPV will be cornered by the new shareholders. Right or not? Correct? Now, very simple. NPV 40,50,000. This 40,50,000 NPV, I don't want to give to the existing 4 lakh shares. I want to give only to what? The new shareholders. For example, in that case, 40,50,000 is going to be shared by 1,80,000 rights. In every right, I can earn an NPV of 22.5 or not. If I pay 32.84, the entire NPV goes to old shareholders, or no? I say, in this 32.84 per right, is the value of one right or not? In this 32.84 per right, the amount I pay for the NPV is how much? 22.5. The amount I pay for the share value dilution is how much? 10.34. The new shareholder says, I will pay this, but I will not pay what? 22.5. I want the NPV means, he says, from the 32.84, let me take out what? NPV portion, 22.5. I'll pay you only for the dilution in share value. How much will be here? 10.34. We pay 10.34 for the right, then the entire 40,50,000 NPV goes to what? The new 1,80,000 shareholder. Respond, yes or no? But if I pay 32.84 for the right, then what happens here? The entire NPV goes to what? The old shareholder, because they not only get money for the dilution in their share value, they also recover what? The NPV also. Respond, yes or no? The rights value is acting as a transport or carrier of NPV from one person to another person. Yes or no? The project is having NPV, somebody should get it or not? We put the rights price as 32.84, who gets it? Old shareholder. We put as 10 point, who gets it? New shareholder. So what I feel is, the right price should be between what? 10.25 and 10.34 and 32.84, so that the NPV can be equitably shared between what? The two parties based on the relative contribution for the NPV. Everybody following? Now, what price should be fixed? We cannot judge now, because it all depends on business situation. Suppose I give two situations. Without the new money, I can never do it. The new money is totally unrelated. It is not related to my business. Totally what? Unrelated. And my business doesn't give any synergy. It doesn't give what? Any synergy. Very simple. Suppose MTG Care is opening a new education portfolio for IIT. For what? IIT in Chennai. Tell me, in that case, will CA business generate synergy? It is not at all related, yeah, because IIT students may not know any of the faculties taking here, yes or no? From MPV sir to anybody, yeah, they don't know. Those persons are not. In that case, just because the CA business is there, it is not going to create so much synergy for what? New business. Because the new business is what? Totally unrelated. In that case, they are contributing the main money or not. So to them only, mainly the NPV should what? Belong to, and they should get a chunk share of NPV. Are you following not? Suppose MTH is not starting a IIT, it is starting, for example, say CW or what? CS, some new business. Yeah, okay. The business has got lot of connection with what? Old business. Now, it creates some momentum or not. In that case, who is providing the launch plan for the project? Yeah, the existing say shareholders business only. They should get what? The share of NPV major, because they are only giving the synergy for what? The new NPV. It all depends on the business situation where the NPV should be shared. But what I say is the right price should be something between what and what? 10.34 and then 32.84 will be the right way to interpret the answer. Yes or no? Exam answer is how much? RTP answer is 32.84. I don't say it is wrong, but 32.84 is not going to retain the same wealth. It is going to increase the wealth by what? 202.36, because NPV is cornered only by the older shareholders. Ennappa, right or no? Yes or no? Suppose I put how much base here? 10.34. Please tell me. A old shareholder is there. For the old shareholder, his existing portfolio is how many shares? 20 shares. At how much the base? 145.34. Have the number. What is the value? 2906.80. Now, he is going to sell the right. How many right? 9 shares. He is going to sell at how much the base? 10.34. He is going to how much? 10.34 into 9. What is the number? 93.06. Can you tell me the total? What is the total? 2,999.14 paise borrow from beggar. How much base here? 3,000. Tell me the wealth change. Does not change. That does not change. Why the wealth does not change here? The 2.5% NPV has gone to other party. I only get the money to satisfy my dilution, not for what? Accretion. Everybody follow what I am saying? In that case, the rights price should be between what and what? 10.34 and then what? The other number 32.84 or something. Everybody, are you following or not? This is how we should be pricing the rights. This is point number 1 I wanted to discuss. Everybody, yes or no? The issue now. That means from this what I understood is rights price is compensating for two things. Rights price compensate you first of all for what? Dilution in the wealth. That happened in the previous sum also. In the previous sum, the rights price is 60 paise. No? Why it's not 60 paise? Because my wealth drops by what? 60 paise. It compensates you. Number 1. Yes or no? But after the rights issue, the investment is expected to give what? NPV. The NPV also can be obtained by the existing shareholder only through what? Rights price. When they sell their right, they should not only recover the dilution in the wealth, they also recover what? The accretion in the NPV. How much should be recovered should be mutually decided, and then the rights price should be fixed by the company. So the company values, here only, valuation comes into picture here. They should sit on table, understand all these facts, and then what? Value. Now we have seen the background. This we can even apply in what? The live cases to value right properly. Everybody following not? This is how the right should be valued or right should be priced. Point number 1, accept or now. 2 more points, very small points, but simple. Let us quickly complete it and then give you the notes in this regard. Okay, see. Point number 2. How much profit I earned? How much profit I earned? Yeah, 75 lakhs. Balance 50 lakhs cash is there or not? No, one thing. Cash should not be kept idle. It should be invested. Get up. This 50 lakhs had a use of financing a new. I don't now require 2 crores 2 lakh 50,000. I want only 1 crore 72 lakh 50. Yes or no? Yes, in that case, the number of shares to be issued reduces or not? Yes, now, see, when I use retained earnings, when I use what? Retained earnings, let's see what is happening to the share price. Now, listen here. Now, the number of shares to be issued is, how much money I want? 2 crore 2 lakh 50,000. In which, how much retention? 50 lakhs. So, divided by, what the price here? 112.5 I want to issue, right or not? Tell me. 2 crore 2 lakh 50 minus 50 lakh is how much? 1 crore? In a correct about 1 crore, sorry, 52 lakhs. Na? 1 crore, 52 lakh, 50,000 divided by what? 112.5. How many shares to be issued here? 1%. 1,35,000. 505. Correct about 135, 556 shares. Ennappa right or not? These are new shares to be issued. Now my question is, will my wealth remain 8 crore 43? Yeah? Will change that? It will change. Whether I finance or retain earnings or through what? Rights issue, the new investment is what? Through crore 43 lakhs. Correct? I invest 2 crores 2,50,000 in the new project, which gives me what? 15% NPV. The new project value is 2 crore 43 lakh. It will not change whether I finance the money through what? Retained earnings or finance the money through what? Rights issue. It is going to remain same. Both are shareholders' money. Yeah, correct? That means the new project value doesn't change. The old value also what? Doesn't change. The company value continues to be what? 6 crores plus 2 crore 40 lakhs. How much? 8 crore 43 lakhs. The company value is going to be what? 8 crore 43 lakhs. But to our surprise, we are not going to share the value by more number of shares. We are going to share the value by what? Lesser number of shares. I share by how many shares here? 5,35,556. Respond yes or no. Tell me what is the value per share? 147.40. Some number 147.40. Now see. This is a better strategy because if I raise the full money through rights value, my value is only 145 point something, yes or no? But if I finance through what? Retained earnings, the value jumps to what? 147. Good strategy because the 50 lakhs I am keeping idle without any investment, yes or no? On the 50 lakhs also cost of capital 12.5 is there, IRR is 0. That 50 lakhs becomes worthless, yeah, it becomes what? Worthless. A cash uninvested becomes what? Worthless on perpetuity, yes or no? That means to make the 50 lakhs worth, I should what? Convert into what? Investment, and the balance only should be raised through what? New issue. That is why I said any company having cash should not sit on cash. Should not sit on what? Cash. You see, number of times companies are sitting on cash means what? They don't have any new proposal. When a company sits on cash, cash is becoming worthless. Cash is becoming what? Worthless. Cash is having a worth only when you are able to what? Reinvest it. Right or not? In that case, my better option is to use the 50 lakhs for what? Financing a new project which earns me 15%, yes or no? And the balance only should be raised through what? New shares. It increases my share price further. Are you following or not? So what is the share price here? 147.40. You are Walter. You agree with this company? As a Walter, I say, don't declare 25 lakhs dividend. Correct? You earn 75 lakhs, no. Put the entire 75 lakhs in what? New project because R is greater than K. Yeah, correct? If I give it to them, they invest only at what? 12.5%. I am here to invest at what? 15%. Give what? 0 dividend and plow it back to what? New project. In that case, I need not raise 2 crore 2 lakh 50. Or raise what? 2 crore 2 lakh 50 minus what? 75 lakh. That gives you what? Much more lesser number of shares. And share price increases further. Are you following not? For this company, best strategy is cut down on what? Dividends and use it for what? New investment. Less fresh capital, increasing the share price. Second option is what? If you want to give dividend, give 25 lakh. Don't keep the return earnings what? Idle. Flow it back to what? Business. And then increase share price much more further. The third option given by the question is what? The least preferable because it's going to give me the lowest share price. Ennappa right or not? And Walter model always need not be accepted because the dividend when I declare, the KE may change as per Gordon. When I don't declare 25 lakhs dividend, the shareholder becomes what? Afraid. They may not what? 12.5%, may become what? 13%, not what? 14%. May even pull down my NPV. Or you'll find out whether dividend should be declared or not is depending on case to case basis. As per Walter, should not be declared. As per Gordon, it depends. Everybody following on? I cannot say Walter is right. God, if the shareholders are unmoved, they say, good project, I don't change my perception. Let us forego dividend means what? Forego dividend, share price increase. If they feel that 21 lakhs should be surely obtained, I will be feeling afraid means what? Don't say, don't cut down on dividend. Give the dividend, at least use to what? Retained earnings is the answer for this particular question. Everybody following, huh? Again I say, I am not answering the question, I am discussing what? The various angles. We are still inside the dividend policy chapter only now. We are discussing how the share price gets affected for various factors. Now, in the entire discussion, in this problem or in any problem, last two classes, what we are discussing? How share price gets affected. Like doctor, no, how a person gets fever or something, he just diagnose, na, like that. You are seeing how share price gets what affected, how it gets affected through dividend, how it gets affected through what rights, through new investment to NPV, so many ways how the share price gets affected. The same thing only again and again we are discussing in this particular chapter. Everybody following or not? So this we complete this particular sum. Very long time it took. Let's have the notes in this regard before I proceed. Write the notes first. Notes I'll dictate, then I'll leave you. Write down notes, please. Write down notes. Point number 1. The wealth of the shareholder. Point number 1. The wealth of the shareholder increased from 3,000 to 3,202.36. The wealth of the existing shareholder increased. Make existing, I just missed out. The wealth of the existing shareholder increased from 3,000 to 3,202.36. Why? From 3,000 to 3,202.36. Why? Question mark. Can I proceed? Write down. NPV per old share is equal to NPV per old share is equal to 40,50,000 by 4 lakh. NPV per old share is equal to 40,50,000 divided by 4 lakhs. 10.125 per share. 40,50,000 divided by 4 lakhs. 10.125 per share. Therefore, for 20 shares it is. Therefore, for 20 share it is 20 into 10.125. For 20 shares it is 20 into 10.125 is equal to how much rupees? 202.50. Don't fight for me for that 14 paise, all rounding up. Okay, 202.50. Right now. Thus, the increase in wealth is due to. Thus, the increase in wealth is due to what? NPV of the new project. Thus, the increase in wealth is due to the NPV of the new project. Is due to NPV of the new project. Point number 1 over. I just explained why 3,000 became what? 3,202.36. Understood or not? Next. Point number 2. When we fix the rights price as 32.84, when we fix the rights price as 32.84, the entire NPV of 40,50,000, the entire NPV of 40,50,000 is cornered by. The entire NPV of 40,50,000 is cornered by. Is cornered by what? Old shareholders. Is cornered by old shareholders as seen above. Is cornered by old shareholders as seen above. This is already proved, no? Because 40 lakh footage did not divide by 5 lakh, 8 divided only by what? 4 lakh. So this is the amount belonging to old shareholder. That's why I have get the number now. It is cornered by the old shareholder. It is cornered by old shareholder. Can I proceed? That means the rights price of 32.84. That means the rights price of 32.84 can be divided into 2. The rights price of 32.84 can be divided into 2. Branch it into 2. First branch, compensation for. First branch, compensation for what? Dilution in wealth. Compensation for dilution in wealth. Compensation for dilution in wealth. Second branch is what? that is NPV share. Second branch is NPV share. Share in NPV or share in NPV. Second branch is share in NPV. Share in NPV. Go to the first branch. What is compensation for dilution wealth? 10.34. Compensation for dilution wealth is 10.34. What is share in NPV? 22.5. The share in NPV is 22.5. 22.5. If you want, put a down arrow mark against 10.34 and just write before 3,000. Before the wealth is 3,000 now? Before 3,000. After the right. After the right, if you do nothing, what is the wealth here? 2,906.80. Before the right, you are enjoying 20 shares worth 3,000. Now after it becomes what? 2,906.80. Nothing you do. Tell me, what is the loss you suffer here? Loss is how much you suffer? Please tell me. 3,000 minus 2,906.80. What the loss suffer? Tell me the number. Correct? 93.20. Loss is 93.20. This loss is you are suffering for how much? 20 share. Loss suffered for what? 20 share. This 20 share loss can be recovered through how many rights here? 9 rights. This loss will be recovered by rights or not? Write down. Loss per right. Loss per right is equal to 93.20 divided by 9. Loss per right is equal to 93.20 divided by 9. What is loss per right? Tell me the number here. 10.36 number. Okay, 10.36. Some number you round it off here. 10.36. 93.20 divided by 9 gives you 10.36. I think I dictated how much here? 10.34. You leave it here 10.36. Everybody getting it or not? Now. No. Very simple, yeah. Before rights, my 20 share is how much? 3,000. After rights, it became how much? 2,906.80. Due to rights, how much is the drop in value? 93.2. This I can recover by selling rights. How many rights here? 9 rights. Every right should be sold. How much rupees? 10.36 to recover my loss. That's compensation for loss. First branch over. Yes or no? Second branch. Go for second branch. NPV. Write down. 40,50,000 divided by 40,50,000 divided by. This should be recovered through how many rights? 1,80,000 rights. 40,50,000 divided by 1,80,000 rights is equal to what? The NPV per right? 22.50. NPV is 22.50. Everybody comfortable or not? Next point. Point number 2 or 3? Point number 3. If the rights price is point number 3. If the rights price is 10.36, if the rights price is 10.36, then please fill in the blanks. Then entire NPV, the rights price is 10.36, then the entire NPV is taken by, correct? The rights price is 10. Was the entire NPV taken by what? New shareholders. If the rights price is 10.36, entire NPV is taken by new shareholders. Entire NPV is taken by new shareholders. If it is, if it is, how much? If it is, number 32.84. If it is 32.84, it is taken by old shareholders. If it is 32.84, it is taken by old shareholders. It is taken by old shareholders. Therefore, a fair price should be between. Therefore, a fair price should be between 10.36 and 32.84. A fair price should be between 10.36 and 32.84. 10.36 and 32.84. Now, everybody understanding the rights pricing or not? Next, point number 3 or 4? 4. The company in the above case, now what you have done in this sum till now? Okay, the company in the above case is keeping, the company in above case is keeping 50 lakhs retained earnings. The company in the above case is keeping 50 lakhs retained earnings unused. The company in above case is keeping 50 lakhs retained earnings unused. Can you tell me how 50 lakhs dividend earnings? 75 lakhs minus 25 lakhs dividend. Okay, unused, full stop. If it is used as a part financing for this project, if it is used as a part financing for this project, if it is used as a part financing for this project, the share price further improves. The share price further improves. The share price further improves. Okay, write down. Rights issue amount is equal to, write one by another. Rights issue amount is equal to, so issue 2 crore 2,50,000? No. 2 crore 2,50,000 minus 50 lakhs. Rights quote amount is equal to 2 crores 2,50,000 minus 50 lakhs. What the rights issue amount? 1 crore 52 lakh 50,000. Rights issue amount is 1 crore 52 lakh 50,000. Next. Number of rights shares. Number of rights shares. 1 crore 52 lakh 50,000 divided by, what the price of every share? 112.5. 1 crore 52 lakh 50,000 divided by 112.5. 1,35,556 shares. 1,35,556 shares. 1,35,556 shares. Share value. Share value is equal to 8 crore 43 lakhs divided by 8 crore 43 lakhs divided by 5 lakhs 35,556. 8 crore 43 lakhs divided by 5 lakh 35,556 is equal to how much? 157.4. Is equal to 157.4. Right. The price increases because same wealth shared by, the price increases because same wealth is shared by what? Fewer number of shares. The price increases because same wealth is shared by fewer number of shares. Same wealth is shared by fewer number of shares. Everybody, are you comfortable or not? Last point. Point number 2 or 3 or 3? Or point number 5? In this case, R greater than KE. In this case, R greater than KE. As per Walter, we should not declare any dividend. As per Walter, we should not declare any dividend and invest the entire 75 lakhs. As per Walter, we should not declare any dividend and invest the entire 75 lakhs in new project. And invest the entire 75 lakhs in new project. In such case, the share price will further increase. In such case, the share price will further increase. Can I proceed? Right. Number of shares is equal to 2 crore 2,50,000 minus how many lakhs? 75 lakhs now. Make a change. 2 crore 2,50,000 minus 75 lakhs. Minus 75 lakhs divided by how much rupees? 112.5. 2 crore 2,50,000 minus 75 lakhs divided by 112.5. How many shares going to be issued here? 1 lakh 30. 1,13,333 shares. Number of shares is 1,13,333 shares. No. Market price per share will be, market price per share here, 8 crores 43 lakhs divided by 1,13,333. 5,13,333 shares. 8 crore 43 lakhs divided by 5,13,333 shares. Tell me the number here. 164.3. 164.22. 164.22. This better than declaring dividend or not? Yes, as per Volta, 164.22. With this, we complete this concept called as rights issue. Next class will complete the dividend policy and start with the portfolio theories. Don't miss the first class for portfolio, very important. Okay.